this is the first business that really worked out well for you.
Yeah.
And you started it when you were 43 with a wife and 3 kids.
Yeah.
Where does the conviction come from to take such a risk in your 40s?
Probably one of those times when people thought the whole family was going crazy because we...
Casper Johansen, the co-founder at the Spartan Group.
One of the most active venture investors in the Web3 industry.
With over 500 million in assets under management.
What is Spartan Group and what's the story?
We really started by just investing in crypto as angel investors. We've been tech angel investors for 10 years, and we saw a lot of use cases like remittance, cross-border, disruption of the banking sector, et cetera, et cetera. We immediately had a lot of referrals of people who wanted us to work with them, and the business kind of just started itself. It was almost like hit us in the back of the head.
Are you ever able to stop and do nothing?
It's difficult. Work-life balance is not like a fixed ratio. Some people need more work-life balance. For example, I have a work-life balance where I have a lot of work and a little bit of life, but it's very concentrated, very focused, and intentional.
You told me the other day that your life was best described by one word: transition.
Whenever you jump into something new, there's a massive transition that goes on. People who have been put in transition earlier on in their life become better at it. I've always benefited from transition, even though at the start of the transition, it's not always particularly pleasant, but there's a catch to this.
What is your mission?
To be happy.
What's your definition of happiness? Ladies and gentlemen, I have the pleasure to announce that we're teaming up with Astar Network on this show. Astar Network is a decentralized blockchain platform that aims to bring billions of people into Web3. And the Astar team has a very specific strategy to make this happen: to partner with the biggest conglomerates in Web2 and help them onboard their customers into our world, the Web3 world. Startail Labs, a core developer for Astar Network, is currently working hand in hand with Sony, the business division of the conglomerate that created the PlayStation, in order to develop Sony's own public blockchain network. The development of a new Sony public blockchain is a huge step towards the goal of Web3 mass adoption, as Sony has a very large user base who could hugely benefit from the benefits of a more decentralized world where assets can be fully owned and transferred effortlessly. The team behind Astar are people with high integrity and great values. I'm lucky to call Sota, the founder of Astar, a friend and trust him deeply to have the best interests of the industry and of all its participants at heart. If you want to check out for yourself, I invite you to watch the candid podcast I recorded with Sota Watanabe, the founder of Startail Labs and Astar Network. And please, 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 if you enjoy this show, hit the like button, leave a comment in the comment section, and subscribe to this channel. The more subscribers, the better the guests. Thank you so much for your help. And now on to today's episode.
It's
It's a never-ending thing.
It's a never-ending thing.
There's no such thing as weeks
No,
days
just,
or weekends.
yeah, there's days and nights, but it's like it's rolling. Sometimes I lose track.
What do you think about, that's a good start actually. What do you think about kind of the pride that we might take? I'd say in crypto it's 24/7, right?
Yeah.
But even you worked in banking, right? I mean, you did a lot of things, but you work in banking or you go, McKinsey consultants, like there's this pride in saying that they work so hard, right?
Yeah.
I do so much. I'm never off, right? What do you think about that? Because we were like that. Oh no, man, like it's nonstop and you kind of have this kind of little kick but is it that healthy?
Well, I think there's a lot of factors. So, I've pretty much always worked hard, even like looking back at school in terms of, and we were talking about this earlier, right? Just in terms of filling the schedule with schoolwork, sports, like just filling up the day. Of course, you have some downtime, but I always worked pretty hard. And I've constantly tried to push myself into new situations and challenge myself. And that usually requires a reset and a lot of hard work. So like when I started at Goldman with a law background, knew nothing about finance. It was a lot of work, even on top of the usual kind of 80 to 100 hour weeks. And I think, back then we worked so hard that you kind of almost have to take pride in it. Otherwise you go crazy because, it is really long hours. And I think it's kind of a stamina thing. It's almost like, you can manage it. You can also have a life and you can work that hard, just like you're like a long distance runner or whatever, or an extreme sports person. So, even as a founder, I think it's not just about the hours. You also have to work smart and work efficient. But the reality is, if you're running a business, there's just so many things that come up. Even small operational matters can actually take up quite a bit of time. And each little thing in isolation maybe isn't that important or that much, but as a whole, they kind of add up. So if you don't just keep executing on everything and on top of everything, things just kind of start to slip. So you're just, by definition, super busy. So I think it's partially pride in working long, but also just pride in what you kind of have built with your own hands, so to speak.
Are you able to do nothing? Are you able to stop and do nothing?
It's difficult.
How do you feel when you do nothing? I have a big problem with that, actually.
I get, yeah. I get a bit like antsy. Even today, I was just, after I went for a run this morning and I just jumped in the pool to cool off and just sat on the pool edge. And after like 30 seconds, I was like, okay, that's long enough. Let's get going, right? Like nothing's happening. It's not a good use of time. So yeah, I struggle a bit. I think maybe sometimes when I take myself out of the element, it's better. Like if I go on a hike, for example, which I do once a week, if I go on a holiday somewhere where like in the mountains, something's a bit more offline, then it's not doing nothing, but it's kind of mentally, hitting pause and just focusing on something else. I think that to me is like the equivalent of doing nothing, not necessarily just sitting on the couch with Netflix, but things like that I can do. But when I'm there, like where I usually do work, it's really hard.
Do you have this in your calendar? The hike time or nothing time?
I don't actually. I used to put in block 6 to 8 for family time. But then I just ended up having so many calls on top of that because like we were working across time zones and our teams. At the end, I was just like, look, there's no point in having that if like you breach it every day. So now but I'm conscious around it, both in terms of course, I want to spend time with the family and the kids, and also have my own downtime. So so I don't schedule those kind of things, but I am aware around it and trying to make sure I maintain some balance. But people also have different. That's what I found over time. People have different, some people need more work-life balance. Like work-life balance is not like a fixed ratio. Everyone has their ratio and you only know yourself. So it's kind of hard to judge others. And I have a work-life balance where I have a lot of work and can have like a little bit of life, but it's very concentrated, very focused, and very, intentional, I think, when I do things outside work.
You built Spartan with your life partner. Do you think it's possible to have a life partner who has a very different lifestyle? So this definition of work-life balance is different from them than from you.
I think it's possible, but it depends also on the stage of your life. I think one game changer is when you have kids together. That just requires a whole different level of coordination and alignment on principles of how to raise a kid, what to do, how much time to spend at work, how much to spend at home, vacations, whose family spend time with. All these things requires it's much more complicated than just a relationship between two people, which is also complicated enough. So I think that's one thing. I mean, my wife and I met at Goldman. So in many ways, we kind of both been recruited into the same culture, and we were in the trenches in the same way the first few years. So that I think helped create a lot of like alignment around culture and values. And I do know couples that are vastly different and they somehow make it work. But in terms of like one is like in a creative industry and very different and doesn't care about numbers, and the other one's like a finance expert or like a hedge fund manager. But I think they'll have some level of core connectivity where they have the same values and outlook on life, even though that like externally they could look quite different.
What is your mission?
In life or at Spartan?
I'd say in life.
To be happy.
But interesting. What's your definition of happiness?
Again, I think it's relative, but it's for me to, when I reflect, and I just reflected a lot because I just had my birthday a few days ago. I turned 50, right? So that's a time to reflect in a way more than others, even though one birthday is kind of the same as the next, but you kind of look back whenever it's like a decade. And I think to me, happiness is kind of saying, look, based on what I've done with my time in the past and where I am now, would I change anything? I would not change anything. To me, that's one factor of then that's why I'm happy. I feel fulfilled and I like what I'm doing. I like where I am. I think there is, and again, this varies by people, but there's also some level of security in that in terms of financially, are you under stress or not? There's a family aspect in terms of the older generations of the family and how stable a base you have there. There's your current relationship. There's how your kids are doing. But to me, it's to be happy in what I see as three main areas is, work and personal and family. That's kind of how I roughly think about it.
Personal would be health, mental health, physical
friends, personal development, things that are just me, basically, whereas the other two parts are all about other people, working with other people and family.
Because I think everyone's goal in life is to be happy, right? Probably a lot of people, they say, my goal is to be happy.
Yeah.
But it's harder than it sounds like. So what's your advice to someone who is unhappy? Like, where do you start? Is it a question of, do you think happiness comes with achievement, or do you think happiness comes with you feel like you're not wasting your potential? Basically fulfilling your potential no matter the outcome. Yeah.
I think it's more the latter. And I think for someone who's not happy, you, of course, have to try to identify why not. So in other words, like identify the problem and then figure out how to address it. And to do that, you have to be very honest with yourself. And that some people are more honest with themselves than others. Sometimes it's external factors that make them unhappy. Sometimes it's internal. But I think changing things up and taking risk and listening to your gut, that's kind of what I've always done. I've made many moves that, from maybe an external perspective, made people shake their heads and wonder what I was up to. Changing up situations that were fine, that looked really good, where I seemed set, and then I kind of just shake it up because internally I had done what I wanted with that, but I wasn't feeling fulfilled. I felt like I needed to try something else. So to me, that's how, and I wouldn't say I was unhappy at the time. I just wasn't, I needed to move even closer. Like I need to keep pushing myself to kind of get closer to happiness, so to speak.
Who are you?
Yeah, I'm, I think to a large extent, you're defined by kind of where you grow up and also your family background. I'm lucky to be from an extremely stable family background, and I think that's probably why I also consider myself quite stable, grounded, and solid. But I grew up between cultures. I was born and bred in Denmark, moved to the U.S. when I was 7, moved back to Denmark when I was 15. Left for London after college and then been in Asia the last 20 years. So I kind of split my time between the US, Denmark, and Asia. So in this current generation, like my kids, it's a little bit more common, I think, to be very international and be very transcontinental, but intercontinental. But in my generation, I am like truly quite international and quite adaptable. Like you can drop me into South America, Africa, Central Asia, Pakistan, Australia, US, Denmark. I'd be pretty comfortable all those places.
The reason you moved is because your parents moved a lot? Because you're saying stable.
Yeah,
but someone stable would maybe, I'm not saying you're not stable if you move. I also moved a lot, but someone stable might just think, I'm feeling great here. Why would I move or change something, right?
Yeah. No, it wasn't much. It was, pretty much once to the US and once back to Denmark, but different places in Denmark. But long stint in the US, 8 years, and then when graduating, it was clear to me always that I wanted to go abroad. So London is a natural first stop for a lot of Danes because it's kind of like in the neighborhood. But
why do you think you wanted to move that much? Where do you think it comes from? I had the exact same. I was always thinking, I come from Switzerland, great country, it's a bubble, right? But I was like, I'm going to do my master's abroad. I'm going to do a gap year abroad in between. And I'm probably going to work then abroad for some time, if not forever.
Yeah. I mean, I think for me, it was growing up in New York. I saw what a city like that requires in order to make it. It requires a whole different level of intensity. And you got to bring your A game every day. And especially in Europe, in many countries, you can have an amazing life without, to be honest, having to bring your A game necessarily every day. And London is that kind of city too, right? It's full of people from all over the world. Everybody moves there, and everybody just has to work really hard and bring their A game to afford the rent, to afford
it's a hard
to stay employed, and to not have to go back to their country, right? So to me, it was that pushed me. I lacked that intensity in Denmark.
But you liked it. You felt like there is two ways to see that. Either like, this is amazing, this is exciting, I want to become one of the best in this hard place, or this is not for me, I'll go back to my chill place.
Yeah, no, I loved it. The only thing that I didn't like about it is at the start, I didn't feel like I was used to doing well in whatever I did. And at the start, because I didn't have for example, at Goldman, didn't have a finance background, I wasn't performing particularly well because I just was pretty clueless about most of the stuff. And that wasn't, I wasn't annoyed by the fact that I was in that situation. I just really had to fight and work extra hard to kind of climb back up the ranks, so to speak, or in terms of reaching a performance level that I was happy with. So, that the easy solution there were just to go back home and go back and work in a law firm, right? Like I was supposed to.
You told me the other day that your life was best described by one word, transition.
Yeah.
Transition. So you mentioned briefly moving right to the US, then moving back home, but also in terms of jobs, you've done a lot of different jobs. Do you want to elaborate on how transition kind of defines you?
Yeah, I think, whenever you jump into something new, like I think jumping is the right word because you're kind of on the edge, what's behind you, you're comfortable with that. And you're jumping into something like new waters that you're not that familiar with. You can kind of see it, but you don't really know what's under the surface and you jump into it. That is really quite unsettling and scary, but you kind of feel like it's the right thing to try it. It just looks so exciting. You just have to make that jump. And then, you make the jump and then there's a massive transition that goes on, and how you handle that transition is, I think you become better and better at it. And people who have been put in transition earlier on in their life become better at it. And I do think it is a very important thing to try, and which is also partially why, sometimes when my kids now have been in the same school for almost 10 years, I feel like, are they too comfortable? Like, do I need to shake it up and drop them into something completely new? There's also benefits of just being in the zone, being comfortable and doing your thing. But I've always benefited from transition, even though at the start of the transition, it's not always particularly pleasant. I think that people who've had a lot of transition, I just tend to vibe with them quite well. There's kind of like a common theme somehow.
Because one of the key skills that you develop when you do that, let's say you start to move around quite a lot when you're young, is you realize it's scary, right, in the beginning. Or even you start businesses or you change career, but then you realize that at the end of the day, nothing that bad can happen.
Yeah.
Like you're still alive, right?
Yeah.
And so you're basically lowering a lot, you're increasing a lot your tolerance to stress.
Yeah.
Which means that every time you're going to be faced with a new stressful situation, it's basically going to feel like this is nothing compared to what I've done before, right?
Exactly.
And what's the worst that can happen?
Yeah.
While a lot of people who might not have moved a lot or been in very stressful situations, I mean, obviously everything is, stress is subjective, right? For everyone it's different, but they might react completely differently. And being good at dealing with stress, I mean, very stressful situation is probably one of the best skills you can have because your decision making is everything, right?
Yeah. Yeah. And also just both making decisions in stressful situations and also knowing when to just kind of take your time and not, unless you're forced to, not make a decision right there and then, just kind of absorb, digest, and then go away, think about it, then make a decision, and not making like a knee-jerk emotional decision sometimes. That takes some practice.
That's probably more something that comes with maturity and age. This second one, right?
Yeah.
Can you train the first when you're younger? Maybe less. We're more impulsive when we're young.
Yeah, it's more. Some people are naturally very good at it, but you're right. It's probably more just experience. Haven't been in so many situations that even if someone on the other side of the table or argument or whatever it is, negotiation from you is just in a place where you just can't even start to understand how they could get there. You're still able to kind of take a step back, put yourself in their shoes, and then think, yeah, okay, I still disagree, or like now I kind of see, and then figure something out.
Probably extremely useful in relationships.
It is
in romantic relationships, in business partners relationships.
Yeah,
absolutely.
And in the intersect of the two. Yeah, right.
Obviously, yeah.
Yeah.
Which not a lot of people have the chance of living, but you have it.
Yeah.
Why do you think people should embrace transition and kind of the chaos that comes with the transition instead of striving for stability in their career? Because that's completely the opposite of what we've been taught all our life, right? Especially, I mean, I wanted to say especially in Europe, but it's not true. In Singapore, it's the same, right?
Yeah.
Or you go to India, hey, you should become an engineer or a doctor, otherwise you're no one, right? It's safe, right? In Europe, hey, go to this university, have the best grade, and go for McKinsey or Goldman, right?
Yeah.
But what you're saying is you're kind of arguing against that, right? I mean, obviously you've done it and you've done it successfully. But why do you think that's the case?
Well, I'm not saying that people need to necessarily jump around a lot. I mean, keep in mind that I'm old, I've had a very long career, right? So the transitions I've made are maybe on average 5 years, but sometimes I'm somewhere for 8 years. Sometimes, it's more, sometimes it's less. But you can also within a company or in a university or whatever, make a transition somehow without externally kind of changing your resume by just trying different things. But I think that the problem with not having transition is you get into a comfort zone, and then you don't really, you don't push yourself, you don't necessarily learn new things, and you don't keep testing yourself. It's just like this question of like, who's the best footballer in the world, right? Is it someone who played in a club for 18 years, just had the comfort zone, had the status, and then is constantly given the best opportunities because that, or is it someone who jumped to 5 different clubs and was able to crush it at every single stage, right? From a career perspective, yeah, obviously, if I get a resume with someone who moves every 9 months, it's a bit of a concern because are we going to invest in this person, bring them up to speed, which takes easily 6 months, and then risk losing them afterwards. On the other hand, it also shows that they're not afraid to take the hard decision if they feel like they're in the wrong place, or maybe they just don't fit anywhere and they're not, so it's not easy. But in general, I would say for most people, for example, for us when we're hiring, just making that transition into jumping into Web3 or crypto, which is getting increased amount of adoption and understanding and acceptance is still for many people, when they have to go home and explain what they're doing, where they're going, is still a big leap. It's still difficult to explain to the parents, to the family, to the partner what they're doing. So even by the fact that they're applying and want to do this, in many ways it ticks a certain box.
What's the most compelling kind of, obviously there is a lot of different CVs you get, right? But what's the most compelling kind of CV that you like to see, right? What do you like to see and what do you not like to see? I'd say both from a founder who is applying at Spartan to get some funding and for someone who's applying as an employee.
Right. I think as an employee, I like to see that they have had something that they have been passionate about and really good at and excelled in that, so that when they get into something, they can really excel. That's what I like to see. I really don't care whether it's ice skating or mountaineering or ancient Greek philosophy or law or whatever it is. They've had a certain area, because that, to me, that's kind of how Goldman recruits too. So, people in my year, and I keep coming back to Goldman because it is quite foundational for me, but I like the way they recruit on culture fit, which is what we recruit on. And then the fact that there's this raw material there that has a certain level of drive, intelligence, and ability to just focus on something and do well. And then for founders, I think it's ultimately their passion for what they're doing and their reason for doing it. And then also, of course, their track record in terms of why are they doing this? Have they founded things before? How did that go? Even if you founded and failed before, it's not necessarily a strike against you. It depends more on why did you fail? What did you take away from it? And what are you applying in this case from your learnings?
Ladies and gentlemen, I'd like to take a short moment to introduce our partner, Mantle, who helps us make this show possible. Mantle was created to hyperscale the Ethereum network with what we call a layer 2 that helps users like you and me transact much faster and at a fraction of the cost of the Ethereum network. Mantle has over $2 billion in total value locked, has a mega treasury of $3.7 billion in Bitcoin, ETH, and stablecoins, and has the largest eco fund of the industry with more than $200 million to invest into new projects that want to join the Mantle ecosystem. The team behind Mantle are extremely smart people who I personally trust with some of my money and who I personally know outside of crypto. We actually had Ignace Ternus and Jordi Alexander on this podcast, who both are key figures in the Mantle ecosystem. So I invite you to watch these two very candid and in-depth conversations to develop your own opinion. And please, 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 if you enjoy this show, hit the like button, leave a comment in the comment section, and subscribe to this channel. The more subscribers, the better the guests. Thank you so much for your help. And now on to today's episode. What's your advice to a 22-year-old dude who went to a good uni that his parents paid for and whose next logical step is a safe job in tech, consulting, or banking, but who feels that his destiny lies into doing something less consensus, such as building a company?
I would say that, first of all, you're 22 and you've got, in that generation, at least 78 more years to live, right? So there's no rush, right? I started Spartan when I was 43. I started companies before that, but there's nothing wrong with spending the first 2, 3, 4, 5 years out of school, just getting solid training in an organization, learning how to navigate, politics, people, learning how to eat dirt. It's not necessarily a bad thing, but it's a very personal thing. For some people, it's something, like for me, it's always been something I wanted to do at some point. I felt like when I came out of school, I didn't have to do it right away. And also I didn't have an idea that I just had to do this. I knew it would come someday, some opportunity, but I just didn't have it then. And so I think it's And then there is also now I'm on the other side of that trade, right, where I'm about to send my eldest off to college next year. So in 4 or 5 years, I could be in a very similar situation, right, where I've forked out a lot of private school and college tuition over about 20 years, right, and then they want to go and do something which maybe from my perspective is not what I expected of them, and is certainly not very remunerative. And I don't even see how they could pay their rent with it. And, I think it's going to be disrupted by AI or whatever, right? But I think you need to let people go on that journey. I mean, sometimes there's financial extenuating circumstances. There's medical bills, there's whatever. Then you just got to do what you got to do. But in a situation where you're flexible, then I don't think there's a rush to do these things. I actually think, each person has their time.
That's very interesting. That's very interesting because it's kind of a double-edged sword, right? For me, I started at 23, right after uni. I started my first company, and I never had an employer from that. And the reason why I started
unemployable.
Well, I think Naval says the taste of freedom makes you unemployable, right? Naval Ravikant. But that's in theory, right? Now the truth about doing that. Why did I do that? Because I did my bachelor in Switzerland, and I did a gap year in Hong Kong and Singapore.
Right.
I was an intern for a large luxury company for 2 times 3 months. I was in these cubicles every day, and I was like, it's going to be hard for me to continue like that. But that's where I developed my first business idea by basically solving some issues there. The reason I started a company, though, was because the amazing thing in Hong Kong and Singapore is it's very easy to meet people like you, basically.
Yeah.
Like, I'm 21, 22. You're kind of naive. You have a big mouth. You are going out there pitching yourself. Yeah. My pitch was, at that point, I'm going to do the GMAT. I'm going to do a top MBA or master's in Europe, and then I'll go for McKinsey. And so I was basically meeting people ex-McKinsey or ex-Goldman who had done the whole thing, and then they were 42, 43, and basically starting a business or running a business since 2 or 3 years. And they were telling me, man, my only regret is not having started when I was your age. In my mind, I was like, what? That's weird. Like, the people who've been through the career path that I aim, because that's kind of what the society and school tells you, and the brands that you see in the universities and everything, Big Four, McKinsey, Boston Consulting Group, etc. They're telling me I should not do that and I should start now, right? So that's how my mind switched, basically. And then I started the first company. But honestly, it was fucking horrible because I was 22, 23, and no one gives a shit about you, right? Like, and
you don't have a very big network, and
there's zero network. You don't even know it exists.
Savings.
You don't understand the corporate politics, and you're there like, man, like, I'm gonna die. I mean, the business is gonna die before I even have a chance to show anything to anyone, because no one gives a crap and no one believes in me. I'm just a kid, right?
Yeah.
And so the double-edged sword is, on one hand, if for many years I was still pushing and building the first company, but I was thinking, had I spent the first 3, 4, 5 years in a consulting company building my network and my skills, probably would have been much easier to start the business itself. But would I have been able to leave a job that pays me well and gives me a comfortable life and take the leap? I don't know, right?
That's where a lot of people get stuck. But I think those people who are 42, 43, which is the same age I was when I started Spartan, and also had similar experience, right? I think that's easier said than done, because they now have the benefit of almost 15, 20 years, call it, of work experience and network, and also some level of savings, right, to fall back on when they're starting their business. That is very different. Although it's also scary and a big leap, it's very different from being, in one way, when you're younger, you have nothing to lose.
Nothing.
You have nothing, so you have nothing to lose. But on the other hand, you also have no base, no buffer, right? So in a way, you're jumping on a plane without a parachute, right? So I think that's easier said than done. It's very hard to be successful when you're that young to start a company. And then, in terms of getting this experience in a big company, mean, I think it's good. I think you can also have small companies, like I would say, or like that, right? Where you can get very solid learning and experience and use that as a base. You don't necessarily have to jump straight into entrepreneurship, but of course you have much more time to try and fail. If you start when you're 22, you can do a new startup every 2 years.
There's this, because I was like that. I was thinking, I'm taking the leap, but then I have my friends, they're starting a career, McKinsey, I don't know, in Switzerland, you make 10K a month directly out of, school. They're building a career. And I'm like, I knew inside of me is the right thing, because I was thinking there's no ceiling to what I'm doing. But at the same time, I was like, if it doesn't work, maybe I'm just like, you compare yourself to others, especially when you're young.
Yeah.
So like, maybe I'm doing a massive mistake here and I'm going to be 5 years behind the others who just took this easier, it's not easier, but different path. And maybe what I'm doing here doesn't make sense, because I'm not sure. And I think it's the truth. I don't think big companies value entrepreneurial experiences.
Yeah.
Like if you go apply to a big company and say, hey, look, I've tried this and blah, blah, and I failed, they're going to be like, you have no experience.
No,
like, right?
Yeah.
So the safe salary
maybe more, but not the same, right? Yeah.
So what's your message to, because you left Goldman, right, when you were 43?
No, you
did a bunch of other things.
Yeah, the first time I left Goldman was right after I made executive director, which is like, again, for me, it was the right time because I reached a new level. I'd unlocked the level that I wanted. And then now it's time to try something. Others both colleagues within Goldman and friends were like, what are you doing? You're crazy. Like you finally made it to this level and now you're leaving. Now is when you're going to start getting paid for real, et cetera, et cetera. And you've got this recognition. And for me, it's just like it's something I had to do. At the time, living in Hong Kong, it's super expensive. We had a 2.5-year-old. It was a big decision, but it was just something I had to do and something that I wanted to do.
Do you think they really thought you were crazy? Or do you think they were almost, I won't say jealous, but like, how does he have the guts to do that when I also want to do something else?
I think it's a combination. Almost everyone says they want to do something else and they're going to leave next year. Just one more bonus, right? Some are just literally kidding themselves, and they should really just accept the fact that they really like what they're doing, and that's totally fine, right? Not everybody has to start a company. Others actually really want to do it and then just don't do it. And again, I'm carving out people who have whatever personal circumstances that mean that they just have to keep the cash flow coming and have bills. But yeah, it's not, especially in Hong Kong and Singapore, it's not the most usual thing to do. Also with, when you're describing your 22, 23, like if you're going around doing that in somewhere like San Francisco, you might get a lot more traction, and there's a track record of people doing that, Stanford grads, Stanford dropouts, whatever, and people will listen to you and take you seriously. But in many, especially financial capitals, there's not a huge startup scene, and anyone taking startup level risk is basically seen as a bit crazy. Also because, and this is also why ultimately we moved to Beijing, because the cash flow in Hong Kong, the cash disappears very, very quickly once you don't have an income. It's just really hard, and your savings just get carved out really quickly. Still, even today, right? Singapore, Hong Kong, it's a tough place to be as a founder.
Absolutely. Which is why I think more and more people, especially from younger generations, they understand the notion of geographical arbitrage when you start a company. But you always have, again, is a kind of double-edged sword. Like I was in Phuket for a couple of days now, and there's a bunch of crypto teams there. Spent a few days with the founder of Entangle, which just launched their layer 1, and they're based there. But yes, it's cheaper. But Singapore is amazing because the people you meet. So it's always either you take the cheaper route, which maybe you're forced to because you have to. Either you're like, oh man, kind of same as what you were saying in the beginning. I need to stay in Singapore. I need to stay there. But if I'm here, I need to make it worth it staying here. Therefore, I need to destroy myself. Like I have, like
a sense of urgency.
Which probably makes you better. because you have the sense of urgency.
There's also more of a network here, especially if you
Completely.
need capital. There is just, although there's still not a lot of capital compared to like New York or San Francisco, but there's still a lot more capital in a place like Singapore versus Phuket.
So you made a lot of decisions in your life, moving, changing jobs, starting companies, stopping companies that didn't work, investing in founders.
That's a hard decision to stop a company that doesn't work.
Let's go with this one first.
Yeah. I mean, when I left Goldman the first time, when I just made BP, right, that I launched a big data company. We raised money for it. We ran it for about 3.5 years before we decided that, we just weren't finding product market fit. We weren't getting enough traction. We had to go raise more capital. Was this really, prime time of our lives, right? Like early mid 30s, the founders, was this really did we want to double down on this? Or was this a time to say, look, we killed ourselves and we literally did like 100-hour weeks for, 3.5 years. And we decided to say, no, this is the time to stop. That's a very difficult decision.
How long did you take to make this decision? And how long do you think you should have taken?
Yeah.
People always say it's the same when you fire someone, right?
Yeah.
Should have been much faster.
Yeah.
Or when you break up, should have been much faster.
I think we probably, from when we gut feel knew it was the case till we actually decided, probably took a year. And then, it probably took about a year, which, overall I would have liked to fail quicker, so to speak. But we were all first-time founders. So I think that's one factor. We also had, angel money, and it's a little bit more personal when it's friends and family money versus, you always have to respect investors' money, but the fact that someone's hard-earned savings versus, which in fact also is in a fund, but it's just abstracted away through multiple layers, but that makes it hard. And then because when you build, especially a very early stage startup, like a lot of people are relying on you, trusting you, getting options, and your team going back to them and saying, sorry, like we're shutting down and you're all fired, basically, with whatever 1 month notice is really difficult.
I remember firing my first employee. Actually, I had to fire first co-founder.
Yeah.
I remember crying. And then I remember also like the first employee that we had to fire. It was not even his fault. Like we had lost a big client because of an internal politic reason. The guy who hired us, we were doing consulting implementation of data analytics solutions actually. And the guy who hired us got fired for some reason. I don't know why. And therefore like I knew this project is fucked. Right. Maybe not directly. They're telling us it's fine, we'll continue. But I was like, yeah, I don't think so.
You lost your sponsor. Yeah.
So then you're like, oh man, this guy has a family and everything, and I'm gonna have to fight. Like I remember 2 nights in a row not being able to sleep, being completely destroyed, and then being like, okay, we have to fire you, but I'll buy you some plane tickets to go wherever you are, because I felt so horrible, right? And
one of the hardest things for me was at that point I'd spent over 3 years and worked, Monday to Friday, and then also every Saturday, full day, and then often part of Sunday. And my first child was between 2.5 and 5.5 at that time. Mm-hmm. So I'd sacrificed a lot of time with her, away from her, working in the office on this thing that ultimately turned out to worth zero financially, right? Mm-hmm. So I had a huge amount of guilt over that too. That was almost harder. Or it was up there with, everything, all the other considerations too. Obviously, I gained a lot in terms of personal development and learnings and things that later on in life I've built upon to be able to provide, what I'd say was a good life. But at that time, it just felt
it's very hard to, say, oh, yeah, cool, I learned all that stuff, blah, blah, blah. But at the end of the day, what do I have to show?
Yeah.
Nothing, right?
Yeah. Yeah. It's tough.
It's very linked. I mean, you told me the other day, so basically this didn't go well, right? You told me once you roll the dice once, if it doesn't work, keep rolling them.
Yeah. I mean, and what I mean by that is if you have it in you to take the kind of risk to jump, to do a transition, if that first transition doesn't work, like don't keep like just jumping, like be thoughtful about it. But, you've shown that you're willing to take some level of risk to try to shake things up, develop yourself, do something, create wealth, whatever reason you do it, then do it again. Because I've tried a few companies, didn't work out. I've obviously invested in some angel investments, didn't work out. But I think you have to keep trying. You need to make sure that you, in terms of mental health and financially, have enough to kind of stay alive, so to speak, to keep trying till you figure what works for you. If you just try it once and then go back to that stable corporate job, like almost certainly at some point you're going to get the itch again. And then my view is you should go for it again.
Do you think if you keep doing that, obviously, in a thoughtful fashion, right? Do you think that success is not inevitable? Basically,
it's not inevitable, unfortunately. No, it's not.
No?
No.
So maybe it's because I'm too optimistic, but I'm just thinking if you're the kind of person, obviously you're not doing random thing in a random fashion, but you have this power of saying, I'll jump, take the leap, I'll try. And you have this, it's a mindset, but basically it's kind of like or a lifestyle.
Yeah.
At some point you'll find that thing that works out. It's kind of mathematical. The first time probably not going to work. Second time probably not. And I see all the people I interview on this podcast. For example, Johan from Wintermute, mega company, super successful. But he's the first. He's also saying, right? I built 3 other companies before that kind of worked, but not really. He said life in general. I'm 39 or 40 now. I had to build 3 companies, the 4th one to be really successful. I had to go through a 10-year marriage that didn't work out and have 2 kids to find the wife. Basically, the more you try, the more it's likely to work.
Yeah.
And it's probably not going to work directly, which we're being sold, at least, I'd say maybe less now, but when I was at school, 2000, let's say masters, I did bachelor and master between 2010 and 2015. Instagram, Facebook, all these mega companies, kind of overnight success, right? Overnight, 10-year overnight success.
Exactly.
But like in the newspaper, it's not that. It's like, oh, look, Instagram, 1 or 2 years.
Yeah.
So you're being kind of told that you should be an entrepreneur. Second, it's cool. Third, you're going to build a multi-billion company in a year.
Yeah.
And then you try and you're like,
yeah, it's just like,
it's not cool.
No.
It's fucking hard. No one gives a fuck. And where is the money?
Yeah.
Basically. Totally. No, but so just to say that people just, in my maybe very optimistic mind, it's the more you try, the more you're likely to find something that works.
Yeah.
Maybe same in dating, right? The more you date, the more you start to understand what works, what doesn't work, who is good for you or not, and then find the right person.
Yeah.
Instead of being like, put yourself so much pressure that the first person I date, marry them, or the first company I build should be a multi-billion-dollar company.
Yeah. But what I think I'd come back to the fact that it's important to just kind of be able to stay alive from the perspective. So example of what I did, not that this is the recipe, but that worked for me is I was in Goldman, I left, tried something, didn't work out, for 3.5 years. Goldman asked me to come back. I came back. I replenished the coffers, 2.5 years, try something again. That kind of worked out, not really. Then I, did something else. But
what was the second thing that you tried?
When I left Goldman, I went in-house with a client to do an IPO. We did the IPO, but then the parent company went bust and went to Chapter 11. And kind of the whole financial play around it fell apart. And I ended up feeling a bit of a fool having walked away from Goldman for the second time and probably not able to go back again, right, to replenish the coffers. But ultimately made it work out. And then in some ways, the path led me to where I am now. So I'm thankful for it. But these kind of rolling the dice and trying things, there's also a bit of a bias around it where you could look at, okay, where am I now? And man, if I hadn't done that, I wouldn't be where I am now. So the right model is to do what I did, but not necessarily, because if I'd done all these things and then not had ultimately success and luck with what I did, you'd look at it and say like, yeah, of course, because you just kept jumping to so many different things. You should have just focused on one thing. Because look at this guy over here, he focused on one thing and he's very successful.
So this second thing at the chapter 11, right? That was the thing. Okay. So it's the second thing that you try, right? And it's kind of working because IPO.
Yeah.
So I guess you had stock options and all that stuff, but then
Yeah.
it doesn't work with chapter 11.
Yeah.
How do you deal with, maybe you are more mature, so it's maybe easier. You were in your 30s, right?
Yeah.
The biggest problem in failure is how we think we're gonna look stupid towards others. It's probably the thing that makes people not start things initially, right? You're thinking, if I fail, everybody's gonna be looking at me and I told you so, right?
Yeah.
Or come with their best advices, I told you so, or kind of like loath about you. And like, so how do you deal? You're like, oh, I tried, almost got there, but maybe God or destiny really doesn't want me to be super mega successful, because there is always something else. Or is it just part of life? Like, to make it big, you probably have to make it try, fail, but also maybe sometimes you make it big and then you kind of lose a lot.
Yeah.
And then continue instead of abandoning at that key moment, right? Where it's so tempting to just say, okay, enough tries. Now I'm just going to go back to the safe spot.
Yeah, I mean, I know a lot of successful people, right? Many of them have been on your podcast and been friends in other industries, right? And there's not a single one of them that hasn't been through very difficult times, both in their past as well as in their current company. It hasn't been like a straight line to success. There's been many instances where they felt like it was near death or at least very, very critical. So I think that's, you have to kind of persevere through that and keep your belief. It's never a straight line. And even when you're from the outside, see people that are very successful, there's still constantly things that come up where, you have to keep running. You have to keep pushing always in a company, even if it's successful.
Maybe we can talk about that. What happens if you don't? And this is a big thing in crypto. When everything goes so well, it's so easy to fall into complacency.
Yeah.
What happens if you become complacent?
I think it of course depends a lot on what kind of company you have. But for example, in our situation, if we become complacent, what we risk is that we no longer get access to the best founders, be it, building with them, investing with them, advising them, which is what we do, because we just, are a bit chill and there's no sense of urgency. There's no intensity. We're just kind of comfortable. Then we go into that more comfortable mode, and nothing wrong with that, but you just have to recognize that you're no longer kind of top of the game and you're not on top of your own game because it's like, it's just like if you're an athlete, if you stop the training because you just kind of broke the world record or did really well, you can't expect to show up at the next race and do what you did before. And if you expect that, you're going to be very disappointed. So I think at some point, everybody has their own point in time where you kind of say, okay, now is the time. I'm going to step back and, I'm not going to train for the gold medal anymore. But as long as you're kind of, if you're in the game, you're running a business, you have to keep pushing. Otherwise, you'll lose your passion, because if you're used to kind of doing well in whatever area you're focused on, and all of a sudden you'll feel that you're not, it's very difficult to accept.
And then you'll get back to what we were saying in the beginning, which is happiness, right?
Yeah.
You're going to lose that.
Yeah. So
Because you're not
it's a
giving your
bit
best.
either or. It's a bit either or. Like, just like I know people who are top tennis players, and then when they stop, they literally just stop because they can't accept just playing a bit for fun and then, losing. Like, maybe later they come a bit back to the game, but it's very hard to just kind of take it down 30% and say, I'm gonna go down to 40 hours a week and then but still keep doing the same thing. It just doesn't work that way.
That's a super interesting point. Because there is this utopia where, I'd say in life in general, but again, very applicable to crypto. I made it. I can chill now.
Yeah.
But there's no such thing, right?
I think it's hard because of the personality types too. Like, yeah, sure, if you went into Bitcoin 2011, put $100,000 worth, I don't know, 100 million now, and you haven't really actually built anything, you just kind of sat on that pile, then maybe that's one thing. But if you've built up a company, you've built up a fund, whatever it is, it just to this point earlier about sitting still, it's very hard to just say, well, I kind of have enough. Like, because at some point, I think initially you do it for the money and because you want to generate wealth, and there's absolutely nothing wrong with that. That's how great businesses are built. But then you kind of reach a point where when you started, you have this goal of, I want to reach here. And once I'm here, that's financially all I need for me, my kids, and then I'm going to retire. And, you know, in some cases, the bear market comes and you dip way below that again and realize that, oh, oops, okay, I'm not quite there yet. And but even for people that reach that point, part of the issue is that target keeps moving, because you keep like, oh, actually, but I kind of need this too, and like, no, but like 2 houses is not enough. Like I have to get here, or whatever it is, depending on personal habits, consumption. But for most people, they reach a point where they realize that, you know, it's not just about that. They really actually enjoy what they're doing. They're building something. They want to keep building it.
Probably one of the good, first crypto cycle, if you play it not too bad, you print a lot of money, at least on paper. And then you start to become like you might become entitled, think you're the king or the queen of the world. And then you probably get wrecked. And the moment you get wrecked, it's really painful, but it's also the moment that probably your mindset is going to shift towards, why am I here anyway?
Yeah.
What's going to make me happy in life? What's the definition for happiness, right? What do I need to be happy? And it's probably being struggling and improving and feeling progress every day rather than a number.
Yeah.
And as long as I have enough to have a great life, I probably don't need as much as I think to have a great life anyway. But if I'm doing something that I'm struggling at every day and I feel that I'm really giving my best, the fact that I'm giving my best is going to provide me happiness. And that's why no matter if I reach that financial goal, I'll continue afterwards. Yeah. Which a lot of people probably who are new to crypto might not understand. Like, why don't you stop when you're at that number or at that? Non-crypto people, they might say, oh, they have 1 million. I'm going to change my life. Or I'm going to do this. Or they have 10 million, right? But I always tell them, if the day you have that number, you're going to change your life, probably you want to change your life now, because you're not going to be happy to get to that number anyway, because the source of your happiness is not a number.
That's right.
It's what you're doing. Yeah. But you probably need to get maybe to that number or higher and then lose it to realize what changed. Nothing. Maybe that's not the source of happiness. Maybe I should focus on the right things.
I think being a crypto founder is it's a very difficult sector to be a founder in, because for most crypto founders, some have pure equity businesses, but like many are associated with a token or a portfolio or a fund, right? And you can track your personal wealth, and people can kind of roughly track your wealth. Whereas if you're a more traditional Web2 founder, like you do your Series A, you do your Series B, C, D, and maybe after the Series D on paper as a founder, you're worth 100 million on paper, but it's not violently moving up and down every day. You might have some trouble in the company sometimes, and people always know that this is equity, it's illiquid, it's subject to, an IPO or selling the company. Whereas in crypto, a lot of the wealth, it fairly quickly becomes liquid. So technically, we could have all just cashed out near the peak and literally just had that in cash or stable coins, right? It's not like it's paper value, but a lot of it is very real. Like you could actually realize it, right? So the psychological impact of seeing that evaporate versus if you're a Series D and have to do a down round, and it's actually much tougher in crypto, I would say. A lot of people, you need a pretty strong personal, gut. It can be big gut wrenching, so that your founder group, the people around you is very important around that. But also, as you say, your perspective in terms of, you can reach a point in the peak bull market where you feel like, you at least on paper, you reach a point where you're like, wow, this is just absolutely crazy. And then very quickly you become humbled again and be reminded that if it was in some way easy come, it can also very easily be easy go. The important thing is to build something like a franchise, a business, something, a foundation of value that you can just over time keep increasing. So you get, higher highs and higher lows over time, but it's just going to be very volatile, but yeah, it can be pretty jarring.
So you're obviously a crypto founder. You founded Spartan Group. What is Spartan Group and what's the story?
Yes, I founded it with Melody and Kelvin, my two co-founders, in 2017. We all have a background from Goldman Sachs in different parts of the organization, but we really started by just investing in crypto as angel investors. We've been tech angel investors for 10 years, and we saw a lot of use cases we liked, especially remittance, cross-border, disruption of the banking sector, et cetera, new social networks via monetary value. So we decided we liked investing. We want to do this full time. Melody and I are good at working with companies as advisors, like we're investment bankers. So we immediately kind of had a lot of referrals of people who wanted us to work with them and funds that wanted us to work with portfolio companies. So the business kind of just started itself. It was almost like hit us in the back of the head, where it's like, wow, so many people are asking if we could work with them. There's a real business here. Let's do it, right? It just made sense.
While you were still employees?
We were all kind of in something and semi-transitioning. We were all in doing something where we're kind of launching our own thing, participating in something where it wasn't too hard for us to jump out. Like, sure, we had to jump out of something and, focus on Spartan full time, but it was a good period for the three of us to do it. And we decided to launch an advisory business and then an asset management business. So that's kind of what we launched in 2017. So that's still our two core businesses: advisory, where we do token launches, token raises, equity raises, M&A, all in crypto. And we have on the investment side 3 funds: a liquid token hedge fund, a DeFi venture fund, and a gaming and metaverse venture fund. And then we also added a third arm about a year and a half ago, which is Spartan Labs, where it's a venture builder who we co-build mainly crypto consumer facing products with founders.
This is the first business that really worked out well for you.
Yeah.
And you started it when you were 43?
Yeah.
With a wife?
Yeah.
3 kids?
Yeah.
Where does the conviction come from to take such a risk in your 40s?
Yeah, it's a good question. Again, probably one of those times when people thought not only I was crazy, but the whole family was going crazy, because we both kind of stopped what we're doing. So and obviously as founders, we're pretty much not paying ourselves the first few years, right? So we income zero. And then we put all our eggs in one basket, and that we started the company together, and that we also then took most of our savings and put them into the liquid token hedge fund, the Spartan fund that we started. So we were pretty much all in, you could say. The conviction, I think, came because, I'd worked in banking a long time. I'd been a tech founder. Melody had worked in banking, in venture, had been a tech founder herself. Kelvin had a long career in banking and also been a tech investor for a long time. I think we, at that point, had enough experience that what we saw, especially this was, of course, Bitcoin as the macro play, but with Ethereum and all the apps being built on top, and sure, it was slow and all that, but we kind of saw that potential of this whole new technology. We all felt like, like in the .com bubble, or boom and then bust, right? We were actually all old enough to have participated in that. We were kind of, 20, 24. We could have participated, but we were all doing like corporate-y type things and kind of missed it. And we felt like this is a whole new paradigm that's being set up. It's like it's deconstructing existing business and putting it back together. And now we are actually at that time, although we felt we were late in 17, because there's a lot of like serious OGs at that time, like early Bitcoiners, right? Including my former co-founder. At least on the building, on the Ethereum, in terms of on the growth of the sector, we were quite early. And we felt that we were early enough to really establish ourselves before much bigger names and more people came in. So it's just, we just had a super high conviction about the technology and this intersect of technology and finance where we found ourselves.
So you launched that in 2017, but when? Early, mid, late? Because it makes a big difference, right?
Yeah.
And the reason I'm asking that is you might have the right conviction, the right timing, go all in. There's this meme, maybe it represents the question better. There's this meme that's these days on Twitter. It's something like, oh, you've been in Bitcoin since 2020 or 17 or whatever. You must be rich. And then the guy is like, because it's so easy to be early, but lose everything, especially the first cycle, right?
Yeah.
So now imagine, I mean, I guess it didn't happen to you. Obviously, that's why you're still here. But maybe let's say it's early 2017, you go all in, you can print a lot of money on paper, but if you don't manage your risk well, you can probably lose most of it. And then the entire story is different.
Yeah, that's right.
What did you do right to be at least able to survive the 2018 and 19 bear market?
What I did right, and I put this down to a combination of just skill, luck, and whatever. But we started investing in early 17. And so we were, starting in Q2 17, we started investing in the ICOs, right? And back then there was no concept of token lockup or anything like that. It was everything's liquid right away. And there weren't that many tokens. So the exchange just list Binance, all these listed them right away, right? Huobi, OKX, Bitrex at the time. So you could quickly turn them over. You invest in one, it goes up, you liquidate, you invest in the next, and you could kind of accumulate wealth quite quickly, like compounding wealth there. And what I think was important from me and Melody's perspective is pretty much sold everything at the peak at the end of 17. Like I remember sitting in, we had a small ski place in China, and we were up skiing, and I remember sitting in the evenings after coming back from the slopes and just selling everything in late December.
Why?
Just I guess because I wasn't completely orange pilled yet, right at that time. Like we jumped into it, but I was still, it's just like it was, even though it was like only from whatever 3K to 17K, which feels really low nowadays, it was just the hype back then, even late 17, it was super frothy. And it was there's a lot of very scammy projects coming out, and it was just a frenzy. And it just felt like too much. And I just wasn't, given the risk we were running to in terms of, just the fact that we're all in, I just wasn't very comfortable with it. So I kind of just decided, let us get out of the market and then wait and see what happens here. And like, if I give up another turn, if it goes from 17 to 30 and I miss out, so be it. I was wrong, but at least I can kind of have that base. And then after that, it all went down. And then kind of was able to start buying back into the market in about half a year later. But then we rolled most of that into our fund. So if I hadn't done that, we wouldn't have much to put into our fund, to be honest.
That's probably where the previous 2 or 3 failures actually helped, right?
Yeah.
Maybe you're thinking, oh man, I don't want to feel like it's going really well, but end up losing it all again, right?
Yeah. Because we felt like on the advisory side, we really felt we were adding value to these projects, and there was a business there. Like maybe it would be a difficult time and we would be able to run a profitable business because we could do all the work ourselves, just the two of us, if we had to, me and Melody on the advisory side. We had a small team, but we could do it. And there's a real business there, and it's sustainable. So I was kind of comfortable with that from a cash flow perspective, that we could, could just about eke it out. And then on the capital side, partially I knew that we'd have to make a sizable contribution into our own fund kind of mid-year. So I needed to have that ready. And then partially it also felt a bit too frothy. So there's been other times since then where I wish I had the same clarity and sold, right? But I didn't. So it's not like, sell when I sell, buy when I buy. Sometimes you should do the opposite. But that particular point in time, I think was the most critical, because if I hadn't done that and we'd watched it, rode it all the way down, it could have been more critical in terms of, hey, should one of us go take a job, right?
So then there's this bear market. You still keep complete conviction. I remember it was a bad one because I was also involved.
Yeah.
Then there is a COVID March crash. I mean, you told me that you basically went back in 6 months after late 2017. So that's like mid 2018.
So August 1st, 2018 was the first close on our first fund.
Mm.
So that's where we rolled pretty much all of our crypto in. I mean, we turned it into cash and then we rolled it in. So at that point, a lot of it was, all of it pretty much was in our fund. And then, our co-founder Kelvin then was deploying that fund, but deployed very slowly.
Mm.
So even like half a year after launching the fund,
which was the bottom, half a year after launching, like early 19, late 18. That's
half a year after, we were still like only 30% deployed, just sitting 70% cash. And then we started to ramp up in Q2 19, which turned out to be really good timing. So that worked out well. Like, I'm happy I gave Kelvin the money to manage too. Like, I don't know whether I'm done better or worse, but I'm very happy with that strategy. And of course, early on, it was mostly our money, so we talked a lot about it. Now we have a lot of external LPs, and it's more of a it's a very professional process. But that I think was critical. It was a difficult time, but we also survived by keeping costs really low, both on the personal front. I mean, right now we have not luxurious, but we have a nice lifestyle, but like our lifestyle and like our kids have seen it, right? Our rent, where we live, how we travel, when we travel, how much we travel, do we eat organic apples or regular ones? Like, it varies a lot depending, especially the early years of the company, based on how we're doing, right? So, there's definitely like a period in like 18, 19 where we're kind of like, wow, can we afford to live in Singapore anymore? Between, rent, healthcare, international schools for 3 kids, wanting to travel to the family. There's definitely like a time there where it was like, it show you, like, in hindsight, you maintain conviction, but there's, you can't not question yourself. It's impossible not to question yourself at some point in time. Like, what the hell am I doing?
Did you question yourself in March 2020 when COVID crash happened? There's a lot of fund that blew up, right? Even if it didn't blow up, it's kind of a catastrophic moment for crypto.
Yeah.
I mean, obviously you entered gradually during the bear market, so maybe you're not that much down, or maybe you're still positive, but still it's a really bad moment where that's where your conviction is being tested, right? Because Bitcoin is supposed to be a store of value, but it gets completely wrecked. The rest gets wrecked even more.
Yeah.
It's we had Arthur Hayes on the podcast talking about the infamous moment where we got DDoS attacked, we'll never know what happened, but it's a really bad moment. Like, what goes on through your mind at that moment?
Yeah, that's one of the moments where I, at least, I felt like what was happening in the crypto side was not specific just to crypto. It was like a total macro meltdown in general and a risk off. So I didn't feel that, like, in 18, 19, people were questioning, is crypto here to stay? Is this going to be Bitcoin? Is this even an industry? Like, what's going on? Regulation was really, difficult. In 20, it already felt more like an industry. It's here to stay, and it was a crash, and it was really bad. But I didn't feel like there was kind of fundamental, foundational concerns about, like, what did I do, and is this an industry that can continue? But it was super painful in terms of just, mark to market on a portfolio basis. It's definitely super painful. And at that time, I sold some holdings, which in hindsight, I wish, on the personal front, I wish I hadn't sold, right? But I felt that I needed to de-risk, right? But it was also just, I also invest outside of crypto, and it was painful across the board, really. That's when I wish I had dry powder and the balls to kind of go all in, right? But I was kind of fairly fully invested at the time. So it was But I think it picked up pretty quickly after that, right? Like we had some really good mandates.
There's also the Bitcoin halving shortly after. So
Yeah.
if you believed in that,
Yeah.
it was kind of like a good thing to fall back on and say, it's bad, but the halving is coming anyway.
Yeah.
Maybe it's a better entry
Yeah.
if you really have conviction,
But
right?
it was hard around the 2020 halving because the previous halving before that was 2016. And crypto wasn't an industry back then, right? It was a collection of very early adopters. And sure, you had Coinbase and you had a few others, but very early adopters. It was largely Bitcoin and a few other things, but it wasn't like a real industry, and it wasn't as massive a market cap and financial asset. So it was hard. Like I feel much more comfortable making judgments and predictions now based on the 24 and 28 halving. I just feel like in 20, the data points was like,
One or two, yeah, basically 2013, 2016.
Yeah, exactly.
So you're like, can I even rely on that?
Yeah, it's not much, not much of a graph, right? So in terms of like A to B. So I think 20 was, and then with everything else going on around COVID, it was really hard to have conviction about anything at that time. Versus like this time where I think we're much more comfortable around it.
So it's a bad moment, but then for the people who stuck around, which is what happens every time in crypto, if you stick around the bad times, you probably reap the rewards, pretty handsome rewards, right? And so 2020, 21 was crazy.
Yeah.
Crazy good. After the crazy bad, crazy good. How do you stay level-headed when you were right? Your thesis is playing out and you're printing like an insane amount of paper wealth. And for me, the most important point here is, I don't remember who I was talking to about that. Another guest. We were saying about the paper wealth is very addictive and it's kind of unhealthy, right?
Yeah.
And makes me feel like you're a king. But there's something else that's a bigger drug than that. Being right early and telling people I was right?
Yeah.
I got this. And that's why a lot of people get wrecked. Because instead of saying, oh, now it's enough, they rather like keep bragging about the fact that they were right and become cocky, which happened to a lot of people in 2021. Then they got wrecked. So how do you stay level-headed and stay alive and maximize the kind of amount of cash you have for the next complete wreckage, right?
Yeah. I think that we stayed relatively level-headed. Like, I mean, in one way was, just on the personal expenditure side, like, yeah, you can tweak your lifestyle a little bit, but, if you change it completely based on your newfound wealth that then evaporates 6 months later, it can be quite jarring, right? So, and that's something that I think because we all came from investment banking where it's also fairly volatile and you can get a very nice bonus one year and the next year it's not very nice. So you cannot base your lifestyle based on paper bonus or potential bonus or wealth, right? You have to have a base level, and that's what you use. I think we followed the same philosophy. So we stepped things up a little bit, but we didn't increase our burn. Same thing in the company. We tried to really maintain cost discipline, even in 2021. Like we give, I would say, generous variable bonuses at the end of the year if we performed well. But throughout the year, we try to really focus on maintaining cash flow and cost discipline. So that helped buffer some of the crash because we weren't forced to, because of financial reasons, let anyone go. Like ultimately we reduced the size of the business, but it wasn't because of financial pressures, because of that. I think another is we believe on the advisory side, we work with founders on getting funding for the business, selling their business. So it's always a grind working with these founders, and there's always challenges, even in a bull market. You're constantly trying to achieve something better because like maybe the year before you should have sold it for 50, but this year selling it for 100 is not acceptable because you could sell it for 125. So there's constantly, even though the market is up, there's constantly this pressure to perform. So I think that kind of helped us keep us level-headed. But we were definitely, we were expecting a blow-off top in the market and kind of waiting for that, and that just didn't come. And then we were caught out a bit on that. Then obviously, this time around, if there's a blow-off top and you sell before it, you're going to be like, oh man. But you also have to just sometimes say like, look, okay, I'm okay to miss out on the last 30%, right? It's been a good ride, but that is just so much easier said than done because you get caught up in the euphoria, and yeah, you do sometimes you lose a little bit of perspective in terms of like, I've been calling it. You forget the last bear market, and you're like, I've been calling it right the last year and a half. I just need to stay fully invested, and then you kind of get caught out. So it's really difficult for that. Even like you look at some of the best, traditional fund managers, most of them at some point in their career have also been caught out despite phenomenal track records.
Do you have rules that you follow to manage your risk? For example, for me, what's really interesting is, obviously every cycle is kind of similar, but it's actually different, right? Hey, we are expecting a blow-off top. It's not coming. Hey, there's the Bitcoin halving, and after 6 months after the Bitcoin halving, we reach previous all-time high. We reached previous all-time high before the Bitcoin halving. How do you navigate that in terms of de-risking?
Yeah.
Like, do you have a framework that is more around prices than around time? Or do you have both a price and time factor that you put together-ish to say, that's the moment I'm going to start de-risking my liquid positions, and maybe that's the moment I'm going to stop investing in venture fund, even if I think that the venture that I might invest into now is good, but it's too late in the cycle. How do you navigate the whole thing?
I think it's in this sector, it's hard to have such a rigid framework unless you're running more of a quant type strategy. When you're running a fundamental strategy like us, both in the liquid token hedge fund, where it's based on like, yeah, sure, there's when the market is slow and in the start of a bull market, you're more heavy Bitcoin and ETH. Mm-hmm. But as the market heats up, you transition out of Bitcoin and ETH and more into the altcoins. And on the altcoin side, it's really there's a view developed, a thesis developed on each one in terms of what needs to play out. And then you look at price on an absolute basis, but also on a relative basis versus, peers and comps. And I think it's more about like you primarily focus on that. But then, of course, we also take a step back and we look at factors impacting the overall market. And every week we look at not just crypto factors, but all the macro factors, and inflation and FX and, shipping rates and all the different oil price, commodity prices, gold, like all the different factors to try to figure out like, okay, from a high level perspective, where are we in the market? But what you risk, I think, as a crypto fund manager is at the end of the day, people are paying you to invest in the sector. There are many times, for example, in 21, ahead of November 21, when it peaked, where you could all look at all these factors and you could say like in April 21, like, man, everything is running into the red and now's the time to jump out. But you would have missed like another, 1-2x on that return. And even going to the top and then losing 30-40%, you're still way above where if you've gone out in April, right? So it's really difficult to judge and be too formulaic about it. But of course, there's factors like a dashboard that we have, we keep track. And if we feel like it's starting to get really overheated at some point, we start trimming the positions across the board and de-risking. Maybe even start, shorting the market more. But you have to be really, really quite, you have to be very agile, I think, in crypto more than in the traditional public markets.
So the halving is in 20 days, something like that? 22 days?
Yeah.
Bitcoin is at basically broke all-time high, previous all-time high. Where do you think we're at in this cycle? Do you think everything just happened earlier because of these ETFs? Or do you think, and the cycle kind of like is going to look similar to what it looked like before? Or do you think it ends up earlier? This is kind of a consensus now.
Yeah.
December this year, it's kind of over.
Yeah, I mean, I wouldn't. So,
Again, it's how do you play? I mean,
Yeah.
obviously you have to be agile and you're going to have to look at things, how they evolve. But like right now, is a mix of feeling and data, right?
yeah. I mean, if you ask me in like some years ago, okay, so at the next halving, where are we ahead of that halving? I would have said that we'll probably at, near, or slightly above the all-time high. That's kind of what I would expect. To me, breaching the all-time high is a start of the bull cycle, not the end of it. Like, I have lots of friends contacting me saying, hey, like, we broke all-time high, I should sell my Bitcoin. I'm like, no, that's just the start. And I'm glad that the market kind of has cooled off a bit recently, because one of the concerns I had was, I do think that the halving was, the price ran up quicker because of the Bitcoin ETF approval, because it is such a massive factor. And I think we're just starting to see the effect of it. I don't even think we've seen the real effect of it yet. But people always want overnight results. So even, now the volume, even though it's like the fastest inflows ever in an ETF, people are already like poo-pooing it and saying like, oh, now there's outflows today and it's all over and people aren't interested. I don't think that's the case at all. But I do think it ran up quicker ahead of halving than it normally would have. It would have been a gradual increase and bounced a bit around. And then maybe up towards the halving, it goes from whatever, 50 and up towards the all-time high. But now we're kind of settling into a bit of a range, right, where it's bouncing around the all-time high. And I think that's fairly healthy ahead of halving. I wouldn't be surprised if, halving happens and a lot of people expect fireworks and it's just like, you wake up the next day, it's business as usual. Miners are just getting half as much, right? So I wouldn't be surprised if there's some volatility or a bit of a dip after halving. But in general, halving has preceded 18, 20-month bull market. And that's still my base case. I don't think it ends the end of this year. I think it goes deep into 2025 and well, probably towards the end of it. But there's many other factors than just crypto. There's also
interest rates, elections,
wars, elections. But right now, I think the political outlook is quite positive also for it, just based on where U.S. elections will probably fall out, how that'll impact interest rates, how that'll impact politicians and the SEC's view on the crypto sector. So I think right now, I'm not usually like overly optimistic. I'm very cautious optimistic, but I'm feeling fairly optimistic actually. Also because there's a lot of interesting things, new products, financial products, games, et cetera, being built in crypto. There's actually like people have used the bear markets well.
Usually there is a kind of consensus-ish that you look at previous all-time high for Bitcoin and you do maybe a 2 or 3x. So maybe, look, previous all-time high 2x, maybe start to de-risk, be careful, etc. Do you think in your mind, the ETF changed this in how high it can go and also in how much we can crash afterwards? So there's two separate questions. The first one is maybe not like a concrete price prediction, but like, can we go higher than what people think? 120, 50, 80? For example, Johan, he thinks 250. Yeah. Something, I don't know really how. So that's maybe the first question is what's a moment where you're like, okay, we captured enough we could go that high, but we captured enough gains to like start to be like de-risking? Because you said your friends asking, previous all-time high now, should I de-risk? Yeah. No, it's the start.
Yeah.
When do you de-risk? Obviously there is factors, but price is one of them. And the other question is, do you think there is still despite the ETF and all these forces, another crash afterwards, 70, 80% Bitcoin, 97, 99% on the altcoins?
Yeah, I think it's not just about the ETF, it's also about the derivatives market. I mean, derivatives markets play an important role in for price discovery also. And we've seen derivatives markets like, when, there's expiry dates or when, there's a short squeeze or people get stopped out, that impacts the price quite a lot. I do think the fact that there's a growing derivatives market around crypto, especially around the large cap coins, and it's been there for a while, but there's more and more value coming in, and more institutional and sophisticated volume. I think that will help, to an extent, will naturally reduce the upside, but it could also reduce the volatility. So yeah, I think something like a 2 to 3x for Bitcoin on all-time highs is not unreasonable. Like, I'm probably also more in the two-handle camp. Like, we go to somewhere 2 to 250. But that's, again, it's, who knows, but that just gut feel feels reasonable to me. I think where a lot more value will be captured in this cycle is in the altcoins, both in the layer ones, layer twos, all the other layers, as well as the apps built on top. There we could see, like, I think Bitcoin dominance will go down significantly. And then, maybe in the next bear market, it comes back up again. But I do think there'll be a lot of value created and maybe eventually destroyed also in that area. But I just think that we're at a totally different place than 2020. If you look at all the infrastructure available now to build on, UI UX is still a challenge for many apps, but I do think it has improved, and there's a lot more users, a lot more openness to it. And then the ETF just brings in this whole different category of money and funds that hasn't been able to access it before, right? It's like the whole, the number of people are throwing around is the baby boomers in the US sit on about $80 trillion worth of wealth, right? And they are going to pass, they're all like, they're all 70, 80, and there's going to be, inheritance and so forth going into the hands of people who are probably more open to an understanding of digital assets. So all things being equal, that is a net positive. That is a lot of wealth on the sideline when you think about, the market cap of Bitcoin is, let's round it up, say it's 1.5 trillion, right? That's another, it's not all going to go to Bitcoin, but gold's, Bitcoin's 1.5, gold's 15, right? 80 trillion is a lot to flow in. And sure, there's global markets, but the US is such a large capital market, and access to these products is substantial. And people haven't even started really selling the Bitcoin product yet. There's reactions to inbound of people wanting it, but I don't even think we've seen the start of this really being distributed properly yet.
Yeah, talking about 1.5 trillion for Bitcoin. Alex, when we did the podcast, he actually, maybe 3 months back, he was saying that he was very bearish real estate, and he was explaining why. And I found it really interesting because not a lot of people talk about that. And then I saw a thread from your co-founder, Calvin, talking about real estate, why bearish, Andrew Kang, why bearish, and talking about Miami real estate, 1.5 trillion, trillions of dollars from boomers being passed down to millennials and Gen Z, who, even if you don't think it's only going to crypto, it's going to divert from real estate, but probably a lot of it is going to go to crypto because crypto assets, which there is a lot of difference, right? Yeah. Because that's how our generation kind of thinks. We just think completely differently. Yeah.
Yeah. Also, they're less tied down. It's a pain in the ass to own stuff, to be honest.
Do you think the same?
Yeah. I mean, I still would still own, I have like a family house back in Denmark, and we're there, we create memories. I'd much rather do that than bounce around different hotels. But it's not like, from a value perspective, it's very small. It's a nice little house, but it's nothing like amazing. And that's, I don't plan to change that. It's just more to have a spot. But it's not like, if you look at previous generations, like the percentage of their wealth they would have put into real estate when they achieve it is way lower, I think.
Alex doesn't own real estate anymore. He sold everything. Johan doesn't own real estate anymore. He sold everything. Yeah. And they're kind of mid-30s, 40. Yeah. Our generation, mid 25, 30, we're just we want to be free of hassle. Yeah. We're just thinking, I'd rather own, if I don't know, I'd rather own an S&P 500 that is liquid, or I'd rather own just Bitcoin. Yeah. Put your money in Bitcoin, and it's just it's going to be easy, and you're not going to have to deal with all this maintenance and all this crap that comes with it.
Yep.
Because we're building businesses, we have something else to do, right?
Yep.
And the return is better.
Yeah.
Actually. So you said lots of value created and ultimately destroyed in the layer 1, layer 2 apps on the top. So basically you're in the camp. I mean, obviously I'm in the camp too, that we're going to have these mega crashes again, right? Especially in the altcoin market.
I mean, it depends on I think over time, all things being equal, because of things like the ETFs, because of derivatives, because of there being just more real use cases and products, that you will have booms and busts, just like you do in the traditional financial markets too. They've been around for hundreds of years, but I do think they'll be less extreme. But there are certain things that just, can get hyped up and run up way ahead of themselves. And of course, they're also bound to come down quickly.
The tech bubble, which you kind of looked at but didn't participate in, is kind of an example. I was looking at, I might be wrong on numbers, but because I was thinking, people are asking, but the ETF is changing everything, right? But then you're thinking, what's the kind of target? Previous all-time high for crypto was maybe 3 trillion. The target for some people for this cycle, maybe 10 trillion, which sounds like a lot. But anyway, let's say 10 trillion. Then I was looking at what was the total market cap of the NASDAQ in 2021 when it crashed. And I think there was some ETFs back then, right? I think around 10 trillion too. So, and it crashed a lot, right? So it's possible with ETFs and the big mania that goes to 10 trillion that it still crashes a lot. Yeah. And people get wrecked, especially on the altcoin side, obviously.
Yeah. It also depends on the amount of leverage in the system too. And, there is on a lot of exchanges, a lot of leverage available, but I also think that's being taken down a bit over time.
Do you think, yes, during the bear market, but during bull market, there is, especially in crypto, people are very innovative to invent new type of leverage. Yeah. And it's what every bubble is that at the end of the day, the way I see it, at least in a very simplistic fashion, is a bull market is a leveraging event, a bear market is a deleveraging event. Yeah. And in crypto, when things start to go crazy, people mortgage the house and all that stuff.
Yeah. And that's one of the reasons why I'm so bullish in that I think we've started a bull market, but we're in the first quartile, because if you look at when I talk to people right now, they're struggling to get leverage. I mean, the market makers, they want to borrow money, they want more leverage. You look at the yield that you have to pay to take out loans and stable coins, like 20, 25%. I talk to founders who have different types of companies in crypto, be it payments companies, lending companies, market making. They're all growing less quickly than they could because of the lack of access to leverage. So, and I think there's a lot of money sitting on the sidelines that will come in later on and provide that capital, that leverage. And that's when we'll see prices really move. So I think now it's almost like, sure, there's leverage in the system, but the price moves so far have largely been, you call it unlevered. So that's why I'm just not seeing that. I'm not seeing us running into even close to the red on the dial yet.
We talked about Bitcoin, ETH, layer 1, layer 2, applications on the top. There's another one that's been pretty crazy, the meme coins.
Yeah.
What's your big brain take on meme coins?
I don't have a big brain take, but I have a take. They're interesting. They're social phenomenons, right? Where, Dogecoin, of course, is the king of the meme coins, and it is top 10 market cap, and it just perseveres. And it has this kind of, GameStop-ish type, diamond hands ecosystem around it. And similar to, some NFTs also have this, they're not meme coins, but they're in a way meme NFTs because it creates a community. It creates an asset that people like and they believe in it. I think it's incredibly easy to launch a token, and it's incredibly easy to launch a meme coin. So I do think the vast majority of them will come and go very quickly. Some of them have meteoric rise and then meteoric crashes, but I do think there'll be a group of them that stay around, and some of them will just be for the sake of it, but others will also actually be true communities and then start building more things around it. But I think it's a freedom of expression in a way, right? Like just like you could put up a website, you can put anything in the internet. You can also just launch a meme coin. There's technically not complicated at all. You can just kind of throw it out there. There's also been all kinds of, you probably call it more toxic meme coins launched recently, but that's very similar to like the internet, where ultimately you create a new channel, new forum, you create Twitter. There's going to be people putting toxic stuff up there too.
You're from traditional finance initially. So you understand how traditional finance people think, right?
Yep.
And they will come to crypto with a certain way to value assets. How would you explain them crypto? Let's start with meme coin because it's like the most extreme thing, right?
Yeah.
Like they're probably going to be like, what the fuck is this bullshit?
Yeah.
Right? But even then, they might look at some really interesting crypto projects. Lido, for example, Uniswap. Great revenue, great businesses, not performing well.
Yeah.
Meme coin. Let's not take the far right kind of like shit of meme coins that, but you have Dodge, but you have Dodge, but then you have WIF, you have Pepe. So these ones are kind of like for me there is, maybe simplistic, but there is three categories of meme coins. First one is Dodge, Shiba, like multi-cycle, but huge market cap. Probably going to do well, but like limited. Then you have the flavor of the day.
Yeah.
Toxic, all that stuff, right? It's fun, complete casino. Then you have the one in between, which are like the one that maybe are now, they were like a couple of 100 million. Now they're maybe 2-3 billion with Pepe.
Yeah.
Probably going to do really well in the cycle, just because if Bitcoin 2x, Solana 5-6x, whatever, with Solana on leverage, but at the same kind is like the new meme coin, but it's not too new to still have enough liquidity. Like this kind of like, and look at Dodge market cap of SHIB last cycle, probably can reach that.
Yeah.
Performing amazingly well versus some great protocols that make so much revenue, but don't perform well. How do you explain that to a traditional finance person when you were a traditional finance person before?
I would go back to basics and say, if you're traditional finance, at the end of the day, you're a capitalist and you believe in free markets. Free markets are about supply and demand, and you believe in the efficiency of capital markets, which ultimately means that the market prices assets and sets that price. Like, why does Amazon trade at this? Why does Google trade at that? Why does a Rolex cost this? Why does a Louis Vuitton, cost this? Why does a Birkin bag cost that? It's not due to the input, the raw materials. There's many other factors. And ultimately, it's priced at what people think it's worth, right? And to me, these coins are the same. They're the ultimate expression of capitalism, where people are willing to pay $1.50 for that coin, and that in itself is the value of it because someone's willing to pay for it.
Same as Bitcoin.
Yeah. Does it need to have? It's just like why is $1 worth $1? It's a piece of paper, right? Backed by the full credit of the U.S. government and the military. But at the end of the day, why is it worth $1? Why is anything worth anything? I think a lot of people, because there's not necessarily a rational explanation, they can't accept it. But the reality is just, it's a liquid traded market. And you look at the volumes, like they're traded. There's big volumes. It's not like a, low volume, and it's a real market price out there. So I think it's kind of as simple as that. And then, at some point, if the market loses interest in it, then the price evaporates. But that's because it loses its social capital, it loses interest. Something else comes along that's new and shiny. But, people will lose some, they'll win some. But at the end of the day, it's capital allocation. And you could also say that it's, maybe it's due to the failing of traditional finance to one, give people access to the system, and two, put products out there that are interesting enough for people to invest in instead of with, right? I mean, there's a reason why people are investing in these things. People, traditional financial system, it's for people in many markets. So how do you get an interactive broker's account? How do you even get a bank account? How do you get any US dollar asset? People in developed markets, they maybe have lost faith in a lot of these large companies. They don't like what they stand for. They feel like despite the fact that there's accounts, there's just such a lack of transparency in there, or they don't like what they're doing. They don't want to invest their money in them. So it's like traditional finance and kind of these guys are, the capital in these coins are taking market share from traditional finance, which is why they don't like it, right? They make money off of capital flowing, and now it's flowing in this sector, but it's just because they're losing market share. And so at the end of the day, they're also, upset about that, and that's just their own failing.
Are you just looking at that and thinking it's interesting, or are you participating in that?
Well, in
terms of personal investment, like, hey, I'm having some fun in dabbling in whatever WIF or Pepe or Dodge, or maybe even in the liquid fund, because you think there is a thesis around that maybe was less explainable last year or 2 years ago, but now has become more consensus.
I mean, it's hard for us to punt on individual meme coins because it's just, it moves so fast. And the way that we invest is we develop a thesis, a catalyst, and it's a little bit of a crossover of venture and liquid investment. So it's hard to do that in the meme coins, and it's hard to do it quick enough to even participate and get that upside. But what we do, for example, we invested in Memeland. We invest in the platforms, like the enablers, like some of the infrastructure around it. So maybe not bet on one coin. Just like in our gaming fund, we have individual games, but we have a lot more invested in the gaming infrastructure that enables all this. So we don't know which one the winner will be, but we believe in the overall theme. We believe that what's happening here is real and it's valuable. But we maybe can't pick the 2 out of the 50 that will really do well. That's more like that is a lot of luck and maybe some intuition, but that's kind of how we think about it. On the personal front, I don't really have much time to invest personally, to be honest. And I feel like
you give everything to the liquid fund.
I have a little bit myself, but it's kind of deployed in a fairly boring manner, I would say. And I have a specific. For that one you asked earlier, I'm much more regimented in terms of my targets. Sell 10% of this, sell another 10% of this, because I have a use for that. I have something in mind that I want to do with it, right? But, and I don't have to answer to anybody else. Even if I leave 100%, the top 100 off, it's okay. I'm happy with it.
It's not maximizing the return. Is, hey, how do I translate that into something useful in my life, right?
Yeah, it's more like, hey, we have this now at the start of the bull market. Let's try to 3x it. If we get to 3x, we could use it for this that we think will, we could use for something that would make us very happy and set it aside. And that's okay. Could it go to 6x? Maybe, but that's okay. We have so much exposure other places, so it's okay.
Meme coins. We talked about meme coins. Before we talked about NFTs that are kind of meme coins with a picture, but non-fungible, right? You own your piece of the community or your access key to the community.
Yeah.
I think it was yesterday evening, I was in a dinner and there was a husband of a friend of mine. And he was saying, oh, you're in crypto, yeah, cool, but like not too excited, right? He's kind of like dabbling, but kind of more what we would call a normie, right? So he's like, oh yeah, crypto, cool. I mean, not doing bad, right? But like I lost 200K a few years ago. So like, I'm waiting for it to go back up. But NFT is dead, right?
Yeah.
For me, it's very bullish. When I hear that, I'm like, oh, yes.
Yeah.
Like meme coins last year, dead, or crypto last year overall, right? Are NFTs dead?
Absolutely not. I mean, NFTs are one of the things that, for me, should be intuitive for everyone. Like, yeah, meme coins you can discuss and Bitcoin as a macro play, but NFTs, like a digital collectible that is unique, it is traceable, it's yours, and if it's a good one, has a community around it, right? To me, that is just like a total no-brainer as a concept. Now you can debate value, should it be worth 10 ETH, 5 ETH, 1 ETH? That maybe some of them are not right now, but over time get overpriced and need to come back down. But as a concept, I don't even think there's any good argument against why there shouldn't be NFTs. And they can take many forms. NFTs can also be, ultimately, when we start seeing more traditional financial assets on blockchain, a lot of them will be NFTs because it's a specific debt contract to someone that's an NFT, or it's a title for a property and that's an NFT. But NFTs in the more PFPE social type way, I think in the last bull cycle, people just launching all these random collections. So that's why I refer, those to me are more like meme coins because people don't have a personal connection to them, right? They just kind of trade them as if they're meme coins, even though they're NFTs. Whereas now with what's happened, there's been a few collections. I mean, Pudgy Penguins is the obvious one. I know you've had Luca on and you've had lots of people talking about it, and you had Alex on, and Alex is the one that ultimately got me into it. But I felt I was late. But again, now looking back at it, I was early enough, right? But to me, there's a real community around there, right? There's a meetup last week. I missed it, but there's a real community. People have a emotional attachment to it. It's my Twitter profile pic is my penguin, one of them, right? So,
Why?
because I want to signal, one, I like it, and I like it better than having my own mugshot up there. And I think it's cute, and I think I like the community. Like if I stop liking the community, even if it 10x's from here, if I stop liking the Penguins community in any way, then I'd remove it there. I wouldn't because I wouldn't feel like I would sell it if I stopped feeling some sort of cultural or personal alignment with the community and what Luca and the team stands for, what they're doing, and all that, right? More so than it's like the problem with these PSPs is once they go up in value, right? And Penguin now is about 50K, give or take, right? It could be seen as being a bit like flashy signaling, hey, look at me, I got an NFT for 50K, I'm
so
super
cool.
wealthy, I can just buy these like JPEGs. But in reality, I feel like a lot of people that have had their profiles, they've had those pics up there since it was like 1, 2, 3, 4 ETH, and ETH was 1,200, and this was like still not a cheap thing, but nothing like luxurious. So it's much more about that, and that's why I think some of these NFTs, the ones that have it really is a community, and that's why it's powerful. And of course, some of them just stay that way, and that's fine, and others build massive businesses around it, like Pudgy's is doing. But there'll be other NFT collections that are legit. Maybe don't have like CryptoPunks are also super cool, but they're not like CryptoPunks dolls and the movie and all this out there.
You guys invested in the Pudgy Penguin equity, right?
I did personally.
You did personally.
Yeah.
Why?
To me, it was a simple. I mean, I've been investing in founders for 20-ish years, right? And sometimes you just meet a founder that you don't need to be in a call with them for very long before you realize they're a beast, and you just have to invest in this person. And that was Luca to me. Like it was a total no-brainer. I just looked at his experience. I looked at his drive. And I think that had it been another collection, like, I don't know, Squiggles, like Squiggles a toy, Squiggles a movie, doesn't really work. Like it was almost like a non-crypto play in many ways. If you look at over time, it'll be a combination between, the world, the game, linking the physical kind of doll to a profile, and, but it won't be just a pure, it's not a pure play, it's not a purist Web3. It's a realistic business model of combining online, offline, Web2, Web3. And that takes a special, unique kind of founder to execute on that, one that has experience in sales, marketing, distribution on the, because it's very hard when it's physical, real stuff. It's so much harder. Like I have investments in those, like pollution mask companies, shoe companies, other stuff. And there's so many things that can go wrong versus like just a digital business. But then at the same time, in addition to that expertise, you have to understand the Web3 community, respect the community, respect the importance of that ecosystem of the 8,888 penguin holders, right? And to combine those two is not easy. And I think Luca had that, that's kind of what convinced me to invest in it and also buy more penguins.
So you are an equity shareholder, you own a bunch of penguins. Where do you think it's going? Because we had Alex. I don't even have to ask them, where do you think it's going? Like Alex is like $10,000 per ETH, 100 ETH per penguin, high scored mathematics. So basically $1 million per penguin. I mean, 100 ETH. James Wu, 100 ETH. Luke Belmar, he's also he bought it with Luca.
Yeah, I watched the podcast with him.
So it's like 100 ETH.
Yeah, I don't disagree. I think it's if you look at where bases went to last time around, I think did peak at a 150 or something, but of course the ETH price was lower. But the top ones of course go for more. But if you look at the floor or the average, I mean, there's only 8,888 penguins, which on a global scale is very little. I absolutely don't see why they couldn't reach that level. The question, of course, is how long do they maintain that? Where do they go from there? And also, it is a bit of a double-edged sword because, if these NFTs become so unsustainable that you can, in reality, only buy one or hold on to one if you have a reasonable amount of wealth. Otherwise, if this is the only asset you have, it's worth $1 million, you're just clinging on to it, then you're a different level of ballsy, right?
But that's
so I just don't want it to become too elitist either, if you know what I mean. But that's also always a risk of the price going up.
Of NFTs, absolutely. But that's why there is little Pudgies.
Yeah.
And then there is the rods and like, but the one of the strengths is actually the community because it's a lot of builders. And the good thing, if you think in investment terms, right? If you have a lot of big builders in the crypto space owning Pudgy, there are people who are probably wealthy already and don't have to sell them, right? So they're here for another reason than pure gain, which is probably, probably a positive factor.
Yeah.
To not say more. You're also super bullish on Bitcoin layer 2 and applications on the top of Bitcoin.
Yeah.
And you've been actually involved already since 5 years when it was not a hot narrative.
That's right.
Now it's the hot narrative, but 5 years ago, probably a lot of people were actually thinking it was completely dumb, right? Or didn't make any sense, especially the hardcore Bitcoiners.
Yeah, I mean, we've been tracking and working with Blockstack since they were founded, right? They're now called Stacks. They're the original Bitcoin layer 2 and the only operational one right now. They're going to have a big upgrade in about 3 weeks. And there's about 10 to 20 other Bitcoin L2s that are going to be launching over the course of this year. So in combination, they're going to make, and they all have different flavors, but in combination, they're going to make building on top of Bitcoin much easier, more approachable. And the reason why we've always liked this sector is we feel that, again, and it's not like we're not in maxis. Like we still think everything that's been built on Ethereum, Solana, and the other L1s are super interesting. And we don't feel like they're necessarily competing. They're just collectively growing the pie. And I think Bitcoin especially is growing the pie because as an asset, especially now with the ETF, it is by far the most accepted asset kind of in broadly. It is the only one that's really completely out of the woods in terms of it's clear it's not a security, so, and it's just the market cap is so big, it's been around for so long. building financial products that ultimately are secured against the Bitcoin blockchain, and where Bitcoin is a native currency building block in those, is just something to me that makes a lot of
It
sense.
makes so much sense.
So being
absolutely.
involved in that, both on the DeFi on Bitcoin, finance on Bitcoin, as well as the NFT or ordinals, on Bitcoin, just makes a lot of sense to me. It's not like shifting all the attention, all the capital to that, but it's something that's really worth being involved in. And so that's why we've gotten quite, fairly deeply involved in that.
So you have a few focus because you can be everywhere, right?
Yeah.
So let's start with Stacks. What's so special? I mean, it was the first one, right?
Yeah.
What's so special about the project and the team? Why do you like them so much? And why maybe you haven't kind of jumped ship and went to fully support someone else?
Yeah. I mean, there's also, keep in mind, we have an advisory business and an investment business. The investment business job is to generate returns. So that one will invest more broader in the ecosystem and might, not invest in 10 or 20 L2s, but might invest in 3 of them to see which one works out. And they all have slightly different focuses. And, the capital we invest doesn't move the needle ultimately for any of them, but we have kind of our bets spread out. But on the advisory side, the reason why we've been working with Stacks for so long and have known them for over 5 years is it starts with the team, right? So the original founders of Blockstack, that Munib and JP are both, obviously incredibly smart people, from cryptographers from Princeton, PhDs. So they know, like, technically very strong. And then also they've just been very pure about their mission throughout. So even throughout, the last hype cycle and so forth, they couldn't have done a lot of things that were more short term to monetize, to hype it up, to push things out there. But they just really focused on building, and they've focused on building it the right way. So now this new upgrade that's coming, it's really long overdue, because they've learned so much now from building for so long that, the first version that's out there right now is just a little bit difficult to work with, a little bit slow to build on. But these upgrades are kind of not the end game, but it's a very important step in just making it a lot easier for developers to build on top of it. So for me, it's just that they've had this conviction and perseverance when nobody else was talking about building on Bitcoin, and everybody else was like, why aren't you look at the Solana ecosystem, look at the Ethereum ecosystem, look at all these ecosystems coming up, right? So that conviction and that perseverance, and the fact that they now have so many years of experience. And now there's also new interesting things being built on top of Stacks. And the things being built on top of Stacks are being built in a way where they will be fungible across the whole Bitcoin ecosystem, including other L2s too. So there will be like a Bitcoin L2 war, just like there's an Ethereum L2 war of trying to win market share. That's a good thing, right? May the best chain or L2 win. And there's not going to be one winner takes all, but it's, we'll see how it all plays out. There's a lot of really good teams, really smart people building in that space. So which one will ultimately win? Hard to say, but as a theme, as a group, I'm very optimistic about it.
You said NFTs are a no-brainer, and you say that building on the top of Bitcoin is a no-brainer. There is an NFT project on the top of Bitcoin that you're super bullish on. It's called OnChainMonkeys.
Yeah.
Why?
Again, it's maybe a bit purist. So the founder of that, or one of the founders, is Danny Yang, who was my co-founder in the big data startup I did 15 years ago. So I've known him for a fair amount of time and know what he stands for. And he is also a bit of a purist in what he does. So, OnChainMonkeys, the way, I won't go into the technical details, but the way they generated that collection first on Ethereum and then they ported it over to Bitcoin is a lot of firsts in the use of the Ordinals protocol and in the use of doing NFTs on Bitcoin. So I think over time, it will be recognized as a CryptoPunks type of collection on Bitcoin, like a Genesis collection that just has so many firsts. And I don't, we'll see what they do with that over time. They're launching other things, but I just think it'll be CryptoPunk like, because it's, again, the team is not hypey. It's just very genuine builders that like the technical aspects of what they've done with this collection.
What's the current floor price for this one?
Sorry?
What's the current floor price for this one? Just for me, because I'm going to have a look tonight.
1.2 ETH.
Okay. So it's still valued in ETH, despite being on top of Bitcoin.
Well, they have, they trade in, like, I look at the pricing in ETH, so it's all comparable.
Okay.
But they trade in they exist still both because they haven't all been ported. So it exists. Part of the collection exists on ETH, and part of it exists on Bitcoin. And then they have other Bitcoin native derivatives or collections they've launched since direct on Bitcoin, including OnChainMonkey OCM Dimensions, which also has a lot of interesting firsts about it.
Okay. You recently led a 10 million round for a project called Alex, which does DeFi on Bitcoin.
Yeah.
I mean, I think the announcement was just a few days ago, right?
Yeah.
What compelled you into not only investing in this team, but also leading the round?
So that was an introduction from the Stacks team, where they're like, there's this crazy group of founders that has been building on us for a couple of years now, despite the fact that, they're really waiting for the V2 upgrade, right? But just really believe in our mission and believe in the infrastructure. So I was like, okay, we got to meet these founders, right? And they're all very accomplished, kind of in their own right, mathematicians, PhDs, and they have background. They've all pretty much been at, they've been at JP Morgan, Goldman, Morgan Stanley as quant derivatives, structurers, so very complicated financial products. So they understand complexity and how to pick it apart, how to put it back together. And that's really what Alex is, because it's not building DeFi on top of Bitcoin is not super straightforward when you're the first one doing it. So you require these really like experience. You require quite a bit of experience to do it. And they're building multiple things on top of the Stacks layer, and then ultimately on all the other Bitcoin layers, including a protocol that can allow all the Bitcoin, because one of the things on Ethereum that's a challenge with the L2s is the fragmentation of liquidity, right? There's all liquidity sitting in all these different L2s. Mm. They're building a link basically for shared liquidity across the whole Bitcoin L2 ecosystem. That's one of the things they're building. They also build a launch platform. They're going to do a BTC-based stablecoin. They're doing a lot of things that, because they've spent a number of years building up all this infrastructure, it sounds like they're launching a lot, but they've actually been building the foundation in order to do all these things and all these primitives that exist in other ecosystems, but not on Bitcoin. And all of that is effectively spinning out of this one protocol and accruing value back to it also. That's why we like the team. That's why we're working with them. That's also why we invested in them.
You told me just like Magnus Grimland, who is one of your best friends and who was here on the podcast. Actually, you both told me that you never really struggled with mental health before. Maybe it's the European Nordic side. But you definitely had some low moments where you felt betrayed.
Yeah.
Can you give me some examples of hard moments you overcame in your life and how you picked yourself up?
Yeah.
And I've noted a few things. The first startup, the big industry players in 2022, and the Chapter 11. So you said you were in Chapter 11 for 1 year. Maybe you can go through that. And then I'd like to link that to Chapter 11 that we've seen in crypto, because there's some really shady shit happen.
Right.
I mean, for people who understand Chapter 11, probably is not that shady, or you understand how the game is. But for the customers of those exchanges, it's disgusting.
Yeah. So Magnus and I he started Antler at the same time I started Spartan with Melody and Kelvin. And we also actually shared an office the first 3-4 months to save costs. We shared a WeWork office. So we kind of saw each other grow. And I think one of the reasons why what him and I share in common is we both have military backgrounds, right? He was a Navy SEAL in Norway. I was in not a special forces program, but a fairly demanding program in Denmark also. So I think we were both broken and rebuilt, like as they do in those kind of programs. So I think that probably provided some level of like steel that meant that later on, even if you faced really tough situations, like it didn't like mentally like affect you in the same way. But so that's one reason why I think some of these situations where you're able to navigate and survive those tough situations, but it still doesn't mean that you don't get disappointed, right? And to me, that's also like we're all about founders, so the relationships are all quite, personal. So, when you see people build something up and then when they disappoint you, that's very emotionally difficult versus just like you invest in something, you get it wrong, you lose money. It's not like there's not a personal connection there. So yeah, I think, just, taking them in chronological order, going through the Chapter 11 process, the reason why that was difficult, it wasn't my own company, it was the parent company that went broke, but obviously knew the executives there. And, for anyone who goes through a Chapter 11 process, there's obviously a lot of restructuring. A lot of people lose their jobs. A lot of people have equity, financial upside that's quite substantial that all of a sudden is either worth something when things are sold or worth nothing, and it can be very meaningful. So the knives literally come out and becomes incredibly political, and it becomes, you really just have to look out for yourself at that point. And, I, being a fairly trusting guy, relied on certain people during that time, and many of them disappointed me. So that was difficult to deal with. And I think just kind of got over that through time, really, and then moving on to something else. In terms of in crypto, I think the one thing that really disappointed me was when FTX blew up, because we did a few deals with FTX where we were on the other side of all the deals. So we were working with founders to sell their assets to them. So we never represented them, but we interacted with Sam early on. And, before things went off the rails, obviously it's hard to say internally what they did, how early on did that start, but at least in terms of mental clarity and focus and ability, the times we interacted at that point in time in 1920, things were still, I would say, running relatively well there, at least, professionally. And obviously it was a key piece of infrastructure in the sector. And I think there's generally nothing wrong with businesses failing. It's kind of part of, it's a natural course of things that you run a business. Sometimes you don't run it well, it goes bust. But when there's, fraud involved and you feel like yourself and many people have been defrauded, then you get really, really disappointed, right? And especially when I personally had a lot of funds on FTX, so getting that, I didn't feel it was stuck at the time. I felt it was lost because it was just clear that this was such a complete and utter shit show. Wasn't even sure where the money was there. It had all been embezzled. Where it was at the time, nobody knew. It now seems like there might be a full recovery, but at the time, you just had to zoom it to zero, right? And then you feel really stupid. You feel disappointed in kind of trusting the people behind this, and also in yourself, in that still, not your keys, not your money, right? But you kept that on a centralized exchange despite having been in the sector for a while.
Maybe linking the FTX, you say full recovery, but what does that mean? Because from what I read is full recovery, but at
like if you
liquidation,
if you had crypto on there, it'd be at the valuation at the time.
So
right?
that's,
you had 300K on there, you're going to get 300K back. But if you just kept that Bitcoin, of course, it'd be worth a lot more today. So that's a difficult question.
That's where I want to get because of Chapter 11, right?
Yeah.
And okay, some of the things I'm saying might be wrong, but like I've seen some complaints online. I tried to verify, but I'm not sure. But for me, it's really this bitter, because you spent 1 year in Chapter 11 in traditional finance, and you said you saw how people are in there.
Yeah.
And obviously, Chapter 11, we had Celsius, FTX, Voyager. I mean, a lot of these, right? And you start to see how it takes much longer than it should, because the lawyers make a lot of money, the advisors make a lot of money, even the people internally, like CEO, whoever is appointed, the longer it lasts, the more money they make. And then the customers get fucked multiple times, because first they lose maybe everything or maybe something. Probably the worst is not knowing, right?
Yeah.
I don't know. It's horrible. Like, at least it's lost. Okay.
Yeah.
Write off. But I don't know. And then you're in this situation where like market pickup, like Celsius bankruptcy period, kind of, but June 2022 kind of bottom.
Yeah.
I mean, for ETH at least. FTX bottom for Bitcoin. And then there's let's take an example, FTX and Solana. So the people who got their Solana stuck in FTX get $16 per Solana per coin. The customer.
Yeah.
Solana today is, let's say, 200, maybe a bit less. But so it's already fucked up, except if you say, oh, but they sold at $16. At least you would have the excuse to say, oh, they sold at $16, so that's the only money they have. Right?
Yeah.
But obviously it's not true.
Yeah.
So they make a lot of money on these coins. Where does it go? And second, because you understand Chapter 11, so where does the difference between 200 and 16 go? Because probably not everything goes to the lawyers or the bankers, whoever is involved. But then there is Pantera coming in and saying, hey, I'm raising 250 million to get this Solana at $60. So Pantera, who is probably doing a lot of good for the industry, right? But for some reason is allowed to come in there, raise money, get the Solana at $60, where they make a 3x like that. Okay, it's vested, whatever. I mean, I feel the customer are fucked 3 times.
What?
They get $16 per sol, which is now worth 200. So there is a big amount of money in between that should go to them, or at least some part of it.
Yeah.
And then there's another third party that comes there and say, because I'm Pantera, or maybe I'm Spartan, or I'm allowed to just come there and just buy this stuff, right?
Yeah.
What the fuck?
So I think, the Chapter 11 process is something that's enshrined in law, right? In terms of how the process has to be run and how it functions. So, if Solana had gone to zero, the flip side of this is if Solana had gone to zero, very few people of those who had that in the FTX account, they would have said like, no, I need it at $16 because I would have sold that, and that's what it was worth when you took my money. So give it to me at 16. They wouldn't say like, yeah, I went to zero. You're right. I shouldn't get anything because it's my Solana, right? So that's one perspective on it. And that's where and I'm not an expert in US bankruptcy law, not the details of it. And I think this might still be litigated, and I think some people are litigating it. It's the same thing with Mt. Gox, right? Where it's like, do they get the Bitcoin? Do they get the money? It varies also by jurisdiction, what the rules are. But it's kind of meant to be a snapshot in time of what is the value at the time where you hit the stop button of what people are owed. So, for example, if it's a more traditional bankruptcy, it's a furniture company, and you prepaid, you're based in Singapore, and you prepaid $1,000 for your sofa, and now it's just stuck, right? Because the furniture company went bankrupt. In the meantime, that $1,000, when you paid it, it was worth, 1,400 Sing. Now it's only worth 1,200 Sing because of the exchange rate moved in the meantime. Like, should you get 12 or 1,400, or should you get your $1,000? But like, these kind of questions are like a bit tricky, right? Because it all depends on the situation. Now, crypto is so extreme that the law, I don't think nobody, when they wrote the law, thought that you'd have an asset there which then 15x's, in the year and a half, right? So it feels like super unfair. And to me, it feels a bit like if luckily I had USD, right? If I had Solana there, I'd be out there banging the table myself, saying, no, I want the current market value, or at least something more for this, right? Or you guys should have sold it when it ran to 120 or when it ran to 80 or whatever. You shouldn't just sat on it, right? Because you should have sold it, and I should have gotten the proceeds from my Solana that you sold for me. Either that or give me my Solana back, but don't give me like $16. But this then comes back to actual bankruptcy law. And so it's not, the lawyers and accountants, they get more of mainly a retainer-based and time-based payments. There is sometimes something for the liquidator in terms of how much they recover, and they get percentage off of that. But anything incremental here that is left over after all the account holders have their funds, that accrues to the equity or debt holders. But I think in this case, account holders also are seen as kind of debt holders. So that basically means that anybody who's invested would get a small equity payout because there'd be some stub left for them. It wouldn't go to the lawyers and accountants themselves. So I think they are just trying to follow the process that they have. I think if someone then litigated it and won and said, no, you have to get the Solana back, from their perspective, it's like, okay, we think we followed what it was, but if the judge says this, then okay, we'll do that. But I understand, so I'm not into the details of it. I can see both sides of it, but I understand why people are pissed off about it. It feels like really unfair. Like, first of all, you freeze my money. Don't know if I have it. Now the market's come roaring back. You guys are still sitting on it and you're not giving it to me, right?
I'll give you a personal example of unfairness, but like at some point you just look into what's ahead and you do something better. I had $7 million of dollar worth of Luna that turned into $5 in 2 days. Yeah. And I was doing arbitrage on a Terra station. Luna, B-Luna, you could do 1.5 to 2% every 21 days. So that was like 50, 60K every 21 days, just pressing a button. So it's on Terra station, right? Fine. But then I'm going to Bali for 10 days, invite 20 people, let's go together, have some fun. So I'm like, I'm not going to leave all this money on Terra station because it's not safe there. I'm not there. I'm not at my laptop. Right. I'll put it on Celsius. I go to Bali. The crash happens.
Right.
I lose all the money. Then for 2 weeks, I mean, obviously I'm destroyed, but like for 2 weeks, I'm like, they talk about this Luna 2.0 thing. Right. I'm like, oh, maybe out of this 7 million, I'm going to have 200K back, which during a bull market maybe goes to 1 million, whatever. It's going to be something, right?
Yeah.
But the snapshot for Luna 2.0 happens at the moment where the crash happened, just before, right? And that moment, my Luna is on Celsius just for 10 days. But then Celsius goes bankrupt. And Luna 2.0 has vesting the future payment, especially for the big Luna holders.
Right.
So it doesn't enter into Celsius liquidation estate because it's not Luna 1.
Right.
So basically it's in no man's land.
Right.
And probably Mashinsky or whoever can just go and get the freaking coins because it's not in the estate, right?
Yeah. These are all these technicalities, right? And then it even comes down to like what your right is, and Celsius versus FTX might also not be the same depending on what were the terms and conditions of the account, what kind of account is it held in, is it segregated, is it not, what jurisdiction is it in? So all these, like you get into like a lot of very specific legal machinations around it that, from the outside, very difficult to figure out. Even when I was in that Chapter 11, which is like a traditional industry, like a renewable energy company, there are definitely some decisions made in terms of divestitures of some assets that I really was left scratching my head at. But even though I was there, without seeing the full picture, it's really hard to figure out like what's going on and why these decisions are made.
Which maybe the sum up of this kind of situation is especially as very optimist that we are, right? And looking forward and building businesses. And there's two ways. Either you go down the legal proceeds route. For UST, there was also a lot of legal actions. I mean, maybe you have a more balanced view on that than me, but for me, I'm like, you know what? Fuck all this shit. What's going to be my power? Even if I do a lawsuit, even if I win, it's going to take me years, it's going to cost a lot, it's going to wreck my mental health.
Yeah.
I'd rather focus on like, I learned my lesson. It's a write-off.
No, same
Out,
for me.
And you just move on, and that's it.
But the reason why, I mean, because originally I have a law degree, right? I have a bachelor, master's of law. So and bankruptcy law was one of the areas I quite liked when I was studying. So I can also like see things from a legal perspective. So I understand to some degree the complexities of like bankruptcy law, but I also understand, the complexities of litigation. And my general view is litigation is like, there's no winners in general in litigation. And I have friends, I've had family who've been through litigation, and whether they lose or win, it kind of leaves them emotionally scarred. And sometimes it is enough capital that you just really don't have a choice, like you have to pursue it. But if it's something that you can live with, I mean, life is too short, like really to go to put yourself through that.
What would you tell your 18-year-old self if you met him today?
I would say, trust your gut and don't be afraid to take risk.
Do you think you started taking risks too late?
No, I don't think so. It also depends on how you define risk, right? When I was drafted into the military when I was 18, I could have just gone the standard route of, doing whatever 4, 6, 9 months, like being a private, just getting out of the way and moved on. I specifically applied for a more advanced program, right, that didn't know what I was going into and which was much longer. That's already like probably an example of taking risk, right? That's not something I had to do. Like it was risky. I could have gotten kicked back out. I could have gotten injured. I could have like mentally impacted me. And likewise, when I ultimately decided to go into banking, despite having studied law for 5, 6 years, that was also really risky because I kind of stepped away from a very comfortable situation. So I think there's different risks, different types of taking risks, not necessarily just jumping out and starting your own company. So I think I was taking risks fairly early on, but it's also a very personal thing, right? Like some people just take risk, right? You can see some kids, like you're just like, oh my God, this kid's they're gonna kill themselves. They're just like constantly taking risks, constantly pushing the limits. And others never get there, and others do it when they're older. But like what I would say, I generally tend to not take uncalculated risks. I tend to at least try to understand the risk reward before I take a risk. I don't just run headless into something.
Did you learn that from a big failure where you actually took too much risk, or you always were able to do these calculated risks? For example, from the Luna thing, I learned.
Yeah.
It's not the first time I got really wrecked. I also got wrecked in March crash 2020. Right. I was levered 3x on ETH with all my crypto portfolio, which was 80% of my net worth. When everything went to zero. But then I had so much conviction, I bought, with the 20% that was left in equity, gold, whatever, I bought ETH. And then, anyway. So I learned from that, don't use leverage.
Yeah.
And greed is going to kill you every time.
Yeah.
What I didn't understand was that the entire 2021 bull run was basically fueled by leverage, lending companies. Yeah. If you put your coins there and you earn 5% or whatever, you have UST, everything is a leverage, right? So basically, even without using leverage, you're involved in the leverage system. Yeah.
Well, I actually did learn a lesson early on that I think saved me a lot of money later on, which was in March 2020, which was like peak NASDAQ, literally, I had put myself, I mean, in Denmark, you don't pay for university, but you still have expenses and so forth. I've worked throughout university. I'd never taken out any student loan, but I had the right to take out all those student loans through my, 4 or 5 years of college, and you can kind of accumulate it. So I hadn't taken any. And then like March 2020, when I was a year away from graduating, I took the max loan, like my whole period. I put it all into NASDAQ, like a NASDAQ ETF, based on advice from my banker, because tech stocks were hot and like crazy. So so basically the only time I ever took any debt. I just levered up, and I took the entire student loan. I just immediately put it into that equity, and then literally like a week later, like it got wiped out by like 80% or so, like just gone. And all of a sudden I was just there with all this debt and really nothing to show for it, right? Then 1 year later, when I got my first few paychecks at Goldman, I paid that all off and got rid of the debt. But since then, I've never traded with leverage. And in crypto, I've never traded with leverage. And even our funds don't really use leverage. So that, of course, sometimes means leaving money on the table because, if you get it right, you can enhance your returns substantially by using leverage. But I'm happy not to use leverage. And it also means that even if the shit really hits the fan, if I believe in it longer term, I can ride it out, just sit on it.
What's your biggest prediction for next 12 months?
Biggest prediction. Well, obviously, as I mentioned, I'm very optimistic about the market overall. I think we see a broad crypto bull market, and across the board with Bitcoin, the Bitcoin ecosystem, the Ethereum ecosystem, the Solana ecosystem, NFTs, and in gaming also. I think we see a lot of like really good games come out that maybe are not like totally Web3 native, but incorporate parts of it and get people on board with Web3 gaming. I think we see a lot of good products come out, just a broad-based bull market driven not just by like finance and macro factors, but by really good products coming out. I think we see, Republican presidency in the US, and I think that means that the regulatory environment, the financial environment, in the macro environment's good, but also the general attitudes towards crypto, if not positive, at least is neutral and not like outright hostile. I think that really helps because the US drives a lot of this. So, and then in many other countries around the world where crypto regulation either is in place or is being put into place, I see that coming into place. So just globally see a much broader adoption and acceptance of the crypto space.
What do you think marks the end of this bull run? What could be something that people really don't think about that could mark the end?
I don't know if it'll be anything unusual that marks the end of this. I think it'll be too much credit in the system, too much leverage that then crashes it.
What's the maybe 1 or 2 factors that people can look at to gauge, man, there is too much credit now in the system?
It is definitely the derivatives, just in terms of like the open interest out there, and just when you can see in the derivative space like how much leverage is in there. I think that's a key indicator. And then I think also in there's different factors in terms of like the fear, greed factors that just look at these trends. I think those are quite telling too. Like, I'm not a huge fan of technical analysis, but I do think like looking at some of these charts, you'll reach a point where by any metric on any one of those charts, no matter what analysis you use, and golden crosses or moving averages and the logarithmic charts, and like you reach a point where like on pretty much every single metric, it just looks like really, really expensive and really like just crazy, like unsustainable. That that to me, I think is like, because there'll always be charts that point in different directions, but you reach a point where it's just clear that it's just not sustainable. But I still think leverage is going to be the key factor. There could be other macro factors. There could be, but again, we'll get the U.S. presidential election over with this year. That'll be another 4 years out. And I think there's not many elections globally that matter. Mm-hmm. Of course, there's like geopolitical things like, what Putin does, what Xi does, like these probably those two people are the ones other than the U.S. president, between the three of them are the ones that can move geopolitics, move, forces, wars. And if anything extreme happens there, then kind of all bets could be off across the board, not just crypto. But I'm not too concerned about that. I think it'll sort itself out in not necessarily untragic way, but not in a way where we move into some larger, broader ranging conflict.
Amazing. Thank you so much for your time, Casper.
No, I really enjoyed it.
That was a great conversation, a great 2 hours and 36 minute conversation.
Oh, wow. Okay.